Hello to everyone. Welcome for the ones for the part of the participants who were not present at the yesterday's session related to narrative report. I'm hoping that actually information and the presentation that we gave related to narrative report yesterday was quite useful for the ones who were attended that session. Today we are continuing with the financial report, and the methodology of work is going to be the same. Yesterday at the beginning we presented the topics that we are going to cover, agenda structure, as well as methodology work. And as you remember, we are going to have as a base for discussion this presentation. Of course, I encourage all of you to pose a question in the chat. And as you remember, yesterday we emphasized that we are going to, during the presentation, try to answer your questions posed, and the questions that we not managed to answer due to the time frame of the sessions, we are going to provide you ex post after the webinar. So today, let me just go to the part of the presentation related to the financial report. Yesterday, we finalized and we went through the template for the narrative report, and this is the case and methodology for today's session as well. We are going to talk about the structure and the content of the financial report. We're going to go through the template of the financial report and discuss, let's say, common grounds and ground rules for the preparation of financial report. Also, I'm going to present you as well certain templates and example of the templates for the required financial documentation. So let us begin now with the financial report. And first of all, like for the narrative, we are going to talk about content and to see how the financial report looks like. As well as a narrative report, reporting is related to the contract and Annex 7 and description of the action on the log frame. In the same way, financial reporting and financial report should be prepared on the basis of against the budget that you have in your contract under Annex 3 of the grant contract. So maybe for at the beginning, we can just remind ourselves on a budget and how it looks like, and the parts, sections of the budget, which is quite important for the financial reporting afterwards. Here it is. So here you have for the old years planning the action. As you remember, yesterday we said that one of the principles is that budgeted costs and the rules for all the, regardless of the contribution, whether it's EU contribution or your co-financing, the eligibility criteria for the cost is the same, and it is treated as such. So basically, here for all years, you have the all costs for the whole action, and here you have forecast for the first year, which is your initial pre-financing payment. You're basically having pre-financing payment for the first year. It depends. If it is contract lasts more than 1 year, then you will receive 100% of the forecast for the first year. And if your contract is implementation period is 1 year, then you're receiving 80% of that forecast for that year of implementation period. So this is your budget, and this is basically you are reporting on the basis of the budget lines and heading that you have in your contract here. Justification is the second part of your budget, which is quite important as well. Given that when you are preparing your financial report, you have, and during implementation, of course, because report is just a snapshot of the current situation and what happened in the previous implementation period. But during implementation, you should consider and pay attention to the justifications that you have in the budget. So basically here you have clarification and justification for each budget line, where you explain and calculate certain costs that are presented here in the budget. So justification is something that you should think about during implementation, in any case of changes, deviations, and we talked about amendments yesterday as well, minor and major. You need to inform contracting authority, and it is strongly and recommended and advised to do it in advance in order to avoid any non-eligible costs. And third part of your budget is expected source of funding, and you'll see in your financial report, especially for the final report, you need to fill in also worksheet related to final source of funding. So basically, this is the document, this sheet you use for the reporting in the financial report, final report, and we'll come to that later on. So this is something that you should rely on during implementation and of course during reporting. So let's us go to back to the presentation. And actually I will skip that and go to financial report. Straight away to the template. So presentation actually is presenting the worksheets and folders that you have or you need to prepare for your financial reporting. First of all, you're preparing financial report, and this is the one that we are going to go through and talk about each of the worksheets and content. And apart from that, you need to prepare also supporting documentation, which is folder 3, in line with the structure of the report that we discussed yesterday. And in folder 3, you need to, per budget line, prepare the documentation relevant for that budget line, meaning like documentary proof. It depends from contracts to payroll slips, timesheets. Then it depends which budget has in this question, but we can talk about it just going right through the template, and then maybe then mention more specifically for each budget heading what is expected as a supporting documentation. Yesterday also we mentioned that supporting documentation is going to be requested upon, you should provide it upon request by the contracting authority. But nevertheless, you should follow instruction of contracting authority, because maybe in certain cases contracting authority may request all electronic documentation to be submitted, including supporting documentation. But in certain cases, in most of the cases, their verification of the report is done on a basis of on a sample basis. So they are going to request. You're going to submit documentation upon their request. I'm talking about supporting documentation of your financial report. And of course, in case that you have financial support to third parties, that is folder 4, in line with the structure of the report that we discussed yesterday. And there you need also to provide all financial documentation as supporting documentation for that case scenario. Having in mind budget justification, this is the first worksheet. We have forecast, budget, and follow-up. We have interim report, we have final report. Those two templates are practically the same. And we have final source and finding, which is that worksheet from your budget expected source of funding. Yeah, so on the basis of that worksheet, you are filling this worksheet. Forecast budget here, of course, it is a forecast, or again from your budget forecast of the first year, and then real costs incurred in that period, just to see how the forecast was real. And this is actually the amount that you need to transpose then in one of your interim on final reports, depending how many interim reports you have. And of course, you are here planning forecast for the next implementation period, and giving your forecast in the same way like you did for the first implementation period, you do for the second. And here, a green mark column, you're giving actually reported costs in the previous period. For example, if you have actually, if you have that needs to be in line with the interim report if you are preparing interim report. This here column needs to be in line with that. Here it is. Something is happening. Never mind. So here in this green column needs to be in line with the interim reporting in that case, because it presents the real costs in this period, in the previous period, the ones that you actually reported. Now we can go to the one, for example, let's go to the final report, but the template is practically the same. I'm going to make it smaller in order to see the let's start now. So this column B, C, D, and E are columns that you need to fill with the information from your budget. So contracted budget under Annex 3 should be part and should be exactly the same here in your financial report. Yesterday at the beginning also, we discussed what is important to have in mind while reporting. And one of the things was, of course, the amendments that you have in your during implementation period. But for example, this part of the financial report can be modified in comparison to your budget only if it is amended, and which is actually written here, budget as per contract / addendum. So addendum allows you to, in your financial report, to present contracted budget differently. In any other case, it is not allowed. So the question that is imposes, let's say, poses all the time is how to present the minor modification of the budget to be, and those modifications to be clear, as well as reallocations. If you have simple reallocations of the budget, which are less than 25% and that are not actually endangering the purpose of the initial purpose of the contract and calling into question the initial award of the contract, and following relevant article in the general conditions for the amendments, and if it is less of 25% between the budget headings, and budget heading, you have budget heading here 1, you have budget heading 3, 2, 3, 4, 5, and 6. So if you have those changes which are in the group of minor changes, which should be, as we also recommended, strongly inform contracting authority and price in order to avoid non-eligible costs. Here, basically, they can be presented. Those reallocation can be presented simply by filling in this column F, which is reallocation that is written here. So, which means if you want to reallocate within the budget heading 3, for example, from budget line 3.2 to budget line 3.3, by simply deducting 3, for example, we can write here, we write minus 300, and then you're just writing here 300 for the ones that you want to increase. So this is the way how you do it between with the simple reallocations of the existing budget lines, because sometimes you can also add one more budget line, and in that case you can do it in the same way. But that budget line that you're actually introducing needs to be inserted above, needs to be 3.31, needs to be here and here filled in totally, and maybe as well marked like this with the red letters to be visible, to that actually you add one more budget line with a certain, for example, cost. Any change, as we discussed yesterday, needs to be justified, needs to be in line with the cost eligibility criteria. So pay attention and inform contracting authority in advance you cannot change budget lines and your budget justification simply by introducing it. Even though the contract is aligning with minor changes, you can unilaterally change and introduce, for example, in your budget, and inform contracting authority at latest with your report, financial report in this case. But this is not recommendable. It is much better to just clear it up in advance and be sure that the change that you're introducing is actually acceptable by the contracting authority. So this is the other changes that you may introduce, like in the title, existing, for example, already existing budget line. For example, you're changing title, you're changing unit number or unit, of course, like presumption is that everything is justified, client verified, and let's say accepted by the contracting authority. I'm going to show you the example how you can do it to be visible and be acceptable. Let me try it like this. Financial reallocation, here it is. So basically you can do it like this. You can simply, because it's the same budget line that you're changing, but you're changing, for example, title, and you're changing unit number, for example. And in this case, unit value, but of course, the budget line remains the same because you cannot increase budget line, budget of the grant cannot be increased. So basically, if you want to increase one budget line, the other one needs to be reduced. So in this case, this is actually same budget line, but presented as two in order to present minor change that it is introduced with the unit number and unit value. And it is being done like that because the total sum down needs to be the same. So we cannot change this column E. And for that reason, you introduced one more row with the changes like this, but the total value of that budget line is going to be in the column F, which is reallocation. So you're deducting column this row and adding up to the next one, which is and this is the way to present minor changes which are visible and to the contracting authority. So for the preparation of the report, before starting, you need to have in mind your budget, Annex 3 of the current contracts, first of all, budget justification as well. General conditions, Article 14, 15 are for the financial reporting, quite important. Of course, the other articles as well, but this is specifically for the financial reporting are defining certain rules. Amendments as well to have in mind what was being done in the previous implementation period, if you have minor amendments or major amendments, as we said, can be then you change this budget columns if you have an amendment of the budget, which is official change of your contract budget. But for the minor changes, as I showed you, with the reallocation of the existing budget lines or changes, if you have changes unit value, you can do it like this. Do someone have maybe question with regards to this, because this is in practice quite challenging, and it's often not presented as it should be in a budget, the changes. No, as I can see, there is no question. Then we can continue further on. I'll then go back to the financial report, the previous one that we were. Here it is. So when we finalize everything, realize whether we had smaller amendments and we have addendum, and we start with filling in the other columns. So it depends if it is interim or final report. The other part, expected expenditure incurred, is filled the following way. This is from the contract. Then you have reallocations. If you have just be when we are talking about amendments, really be careful about any changes for the sources, and this should be consulted with the contracting authority for sure. So further on, you are actually, this part from column G and onwards is basically your financial report. This is what was planned in the budget with addendum, if there is any, relocation that you do, and then what, which expenditures incurred in the reporting period, that part of the implementation. So basically, any units should be same as budgeted, as well unit value. Units, I mean, may not be the same. It depends what happened in a previous implementation period, but you fill in units, unit value, it should be the same like here as it budgeted, then you are entering the total costs. If you have previous reporting periods, for example, if you have, you are preparing either, regardless what you're preparing second interim report or final report, and you had previously one interim report, you are filling in column F, which is actually accumulated costs from the previous reporting period. So you're basically, that's why I said that you have here real costs. Something's happening with this worksheet, but you have here real costs that you reported actually, and this needs to be here. So whatever you reported in a previous period needs to be filled in here. And this column F, it's cumulated costs from the start of the implementation period. So basically, it means that it is sum of column C. If you C plus D, you have this column filled in. So if you're preparing final report and you have two interim reports, previously you need to here to present the all costs from the reported costs from the previous period. And in these three columns, you are actually a relevant cost for the current reporting period you're presenting. This is from the previous reporting periods, and this is actually sum of all costs incurred during implementation period at all. This is presenting variations in euros, is percentage, and explanation why those variations happen. Be sure that if you have variation in increase of certain budget lines, which is not led by decrease of others, without prior notification or contracting authority, budget cannot be as such as overall cannot be increased. So you basically will not be accepted and will not be treated as eligible costs. Also those changes that arise because of the, for example, exchange rate and exchange losses also cannot be accepted. So let us go. This is basically how you prepare your financial report, and that is each budget line filled in with a certain information. It is more or less, I mean, this is the same with the interim report. And if you have more interim reports, you need to each of these interim report just multiply and inform. Here in the column, you're going to insert information from previous interim reports. Let me see now, maybe we should go back to presentation. So this is that we discussed, but going through the template, basically the worksheets that you have, the folders that you need to prepare. This is also procurement documentation that are part of the financial documentation. Folder 4, which is related to the financial support to third parties. All of the documentation that we actually mentioned yesterday for the narrative report, it is the same. You need to keep, it needs to be kept for 5 years after final balance. So in any case, if contracting authority is not asking you for certain documentation, you need to keep it in your records and structured in line that we structure in a way that we explained yesterday. That is the best practice of keeping and documentation and any records related to project, because not of because of you and the future verification controls and everything that need to can then maybe come and verify documentation even on the spot where project activities were implemented. And that's why, as you remember, in folder and section 5 of the final narrative report, it is required to provide the information about where is the location of the documentation. So this is, let's say, the content of the financial report. And let's say the structure and the worksheets and folders that you need to have. Folder 2 is related directly to supporting documentation for the financial report. And first of all, that you need to have is bank statement of the initial or further pre-financing payments by the CA, and it is important because of the exchange rate. And as a proof that you received pre-financing payments, initial or further. Then a bank statement on interest yielded on the project bank account that is open, because it is suggested and advised to open the project bank account in order to funds to be easily traceable. If you can provide assurance and some kind of proof that in other case the funds can maybe traceable, even though there is no separate account, maybe contracting authority can allow you something like that. But in practice, mostly separate project accounts are open specifically for the project incomes and outcomes. So there's a second document, that this is only for the final report, just to see that there were no interest yielded on that account. That quite important document that you need to prepare, and for me it is basic document basis. This is basis for the financial reporting is detailed breakdown of expenditures, which is also described and elaborated under Article 15.7 of the General Conditions. Later on, we are going to talk maybe more about this document, and I will present you template as an example how it should look like. Maybe we can then discuss more about that document. But for me, it is not even possible to prepare a financial report with this kind of document. Even maybe you have some kind of internal financial monitoring table as part of your internal capacities for monitoring on financial flows. But anyhow, this is in a way, this is it, to see chronological order of the costs, to see how much funds you spend and how much is left. So how much you received, and so on and so on. It's quite clear in one place. You have all information needed, from the supporting documentation to exchange rate and dynamics of spending of funds. But we will talk about it later on. Then notification. You should prepare notification in case of minor modification, at least, which is envisaged by the contract, at least with the report. But anyhow, you should do it, as we already said in advance, just to be sure that it is to avoid or prevent any kind of ineligibility of costs. So notification, calculation of project team salaries, which is of course optional. This is not something that is a mandatory requirement, but it is useful, just also like tabular spreadsheet, to show the calculation of on a one place, the calculation of the salaries of the team. You should also prepare nomination of project team, just to see who is nominated from which organization, because you have your partners and you have co-beneficiaries to see the percentage of their engagement, job description, and the period of engagement, of course. So basically, you need to, by the authorized person, provide all financial documentation as well as a report. I think that we tackled this yesterday, needs to be signed by the authorized person. And what does it mean authorized? For me, it's the best way. The authorized person for sure is someone who signed a contract, but sometimes it happened that in the meanwhile that your, for example, head of your organization is changed, so you have other authorized person. But for me, the best way is to be signed by both, like project manager and then authorized person on behalf of organization who is presenting the organization. Sometimes that is project manager, which is maybe ideal situation, but anyhow, if it is not, then maybe it's the best way to be signed by both. And that is the same way for the documentation that you're providing, financial documentation that you're providing needs to have authorized signature from someone from the organization. And we can discuss that as well when we are going through the documentation and by, through each of the budget line, on the budget heading. Then transfer and ownership, it's if it is applicable, of course. We are going to talk about it, I think, later on, more in detail, but it's Article 7.5, 7.6, and it is only with the final report at latest. You can do it earlier, but at latest you should do it and provide the contracting authority with the final report. Then we have expenditure verification report, which is again if applicable, it depends, and it is regulated by with the Article 15.7 in general conditions, and of course with the special conditions, but this is also something that we are going to talk about later on. And apart from this horizontal documentation, let's say, in this folder with the supporting documentation, you should provide for each budget line specific and relevant documentation from the contract, pay slips, proof of salaries that are paying, bank statements, pro forma invoices, VAT exemption, tax exemptions, invoices, delivery note, provisional acceptance, and other permits if works in question, and so on and so on. So basically, this is the folder too, with the horizontal documentation and with the specific documentation that should be in this folder structured by budget line. I mean, but by the heading and budget lines. Andrea, did you want to say something because you're a peer? Your peer.
Yes, actually, I'm just in the role of the messenger, let's say. We have the colleague Marco has 2 comments in the chat section. I asked him whether he wants to also speak live but have no response. So we can actually wait for you maybe to finish what you have and then to respond on these actually to like one is a question, one is a more comment on the situation that happened, depends as you wish. Do you want to actually communicate now or you want to finish the part of the presentation? I don't hear you, you are muted.
Sorry, I'm not sure that we are going back to the reallocations. And first of his question is related with reallocation. So I would like maybe him, if he is willing, to present us his case, and then we can maybe discuss about it, because the first question is related to reallocation, and the second is related to forecast budget that we also mentioned while we were going through the template. So maybe he can present case 1 and then discuss case 2 and then discuss, and to finalize with this part of presentation, meaning the template and the reallocations.
Okay, so I don't have a response from Marco yet. Whether he wants to actually speak or not. So maybe okay, okay, good. Then, sorry. Okay, Marco, can you hear us? Yes.
Hello everyone. Can you hear me?
Yes, yes, we can hear you.
Yes, my name is Marco. I'm from Nons, and our experience was like that in previous report which we sent to European Commission, we sent like you represent on the same way. We put only deducted amount. Like in your example, for example, we deducted 300 euros and we add on the other budget line 300 euros, and that was okay. But in the next our project, when we sent interim report, we sent on the same way. So in the column where we should put does that minor relocation in according with the annex with the wait a second. Allowed relocation article 9.4 of the general conditions. They gave back to us our report with the I don't know how to say with the request to enter the new values of the budget lines. For example, if we increased budget line 1.1.1 from 100 euros up to 200 euros, we should put amount of 200 euros, not plus 100 euros. And when they calculated or summary all of these budget lines again, they should be the same as our totally budget value. Not zero, like in your example. They just ask us to
I may say that contracting authorities can have different approaches. And that's the thing that I'm actually, and yesterday I was repeating, and today I can repeat. It really sometimes the first thing that they say, please follow CA instructions, because it can differ from program to program, from contracting authority to contracting authority too, because you can have, for example, contracting authority UD in certain country and different maybe requests enter commission. Actually, if you're directly working with the commission and so on and so on. So basically, you need to follow that. For me, this is the basis in how it should be. I cannot comment fully now because I'm not sure about the all circumstances, whether you have other changes in the budget that led, in principle, the first 3 lines in the budget columns in the budget cannot be changed unless it is addenda. So, and the best way to show it in a proper way is this through the allocation comment or by introducing a new budget line and rent market just to see the changes. So basically, maybe their approach is a bit different, which is also acceptable. I repeated that in this, job, nothing is like black or white, right and wrong. There are rules that needs to be respected and they're prescribed in the general conditions. That's why I'm referring always on the general conditions. And if you don't know how to proceed, just consult the general conditions and consult DevCo, e-companion that you have on internet. That I also put a link for that document in this presentation, and you will get the presentation. Where they gave interpretation of each of the article of the contract. So basically, that is something that you, and all other things, and special conditions as well, because sometimes special conditions are derogating general conditions. And often in general conditions, it is said this is the rule unless otherwise is specified in special conditions. So both special and general conditions should be always. Any other things out of this, let's say, this obligation from the contract is a best practice or practice of certain contracting authority, which is not right or wrong. It's just the way how they doing their business processes and how they and sometimes it depends even from project manager, financial officer, because they have certain way of working and understanding. So. So basically, yeah, it can happen to be like this. But anyhow, you'll see in future implementation of funds, I think this way of presentation, it can be quite acceptable from most of the contracting authorities. But as I said, it is not wrong. If contracting authority is requesting like this, you do it like that. It's just a matter of presentation. So this is the first question. And second, okay, second is when the project lasts more than 2 years, okay, and we last send report for the second year. Do we enter?
Kalina, sorry, because the second comment was said to panelists, so maybe just to actually read it, or Marco can present it, because the group cannot see that another comment. It was not sent to everyone. Marco, can you present it, Marco?
Okay. Thank you for the first answer. Because we are really under the big stress when we write reports for EU, and we.
Yeah, we know, but just relax.
Okay.
Everything's going to be fine. And I think
Yes,
that a contracting authority wants to help you. As we talked yesterday, I don't know whether you were present. They are really, they want you to succeed. That's the idea.
Yes,
And they just want to set things if they're asking something. And I know that we are repeating. I know Andrea and me, we are repeating so many times. I said this. Just relax. Everything is okay. They're good guys, not bad guys.
Okay. Yeah.
But it's just useless because you're stressed anyhow.
Okay. Yes, but when they.
I just want to add, we are also stressed when we receive the question.
Okay.
It doesn't matter what we are promoting. We are also stressed, because you always think that someone is actually questioning your work and forgetting about that they are just asking for clarification or giving you instruction. Yeah.
Okay, thank you very much. And my second question was about the sheet forecast budget. When the project lasts more than 2 years, and we should send a report for the second year, do we enter in the last year in the previous period, like the period of reporting, or we should put the values from the beginning of the projects?
Is this the sheet? Is this the sheet you're talking about? I just shared. Yeah. So your question is, if you have, for example, more than 2 years, of course. So here is the previous period, okay, and forecast for the previous period and real costs. So if you have more years than one, this is often, the forecast from the budget for first year, and then you put here what is actually happened for that same year, and then you give for the next year. But if you have 2 years, you need to put the forecast cumulatively here and real cost for the previous period. That's the right way, because that there is no other way to show it, and then forecast for the rest of your implementation period. Because those 2 periods you already gave the forecast to the contracting authority, and you already had reports, and they approve it and give you the so basically you are entering here the forecast you gave initially to contracting authority, and the cost that you reported in the previous period, and the forecast for the next. So these 2 will be cumulative.
Okay, but the columns for following period we put just for the next report.
Yes, yeah, just for the next. Yeah, that's right.
For example, if we put in previous period one budget line 100,000 euros, for example, for spend for sub-granting, and we move that for another reporting period for coming. And should we put again in following periods that budget line, or because we already put that in previous?
It depends. It depends. Yeah, of course, because in the real previous period, it won't be there because you didn't spend it, even though you planned it. It happens. I mean, that you don't you spend your money and you planned you do it because you delayed with certain activities and then it happened that there is no cost. Or you delayed with a tender procedure, for example, which
Yes,
often
yes.
happens, and maybe prolong even your activities because of it. That's it. I mean, the logic is just to see what was forecast, what was really happened, what really actually occurred, and what you plan for the next period.
Okay, no, because
So-
our dilemma was because when we fill following period, all plans cost for following period, that columns are based for our payment request.
Mhm,
And
mhm.
because, for example, we already requested
Uh-huh.
money for that activity in previous period, and now we actually requested.
Yeah, but
them for that
you
money.
have, as I recall, you have defined requests, payment requests in the special conditions. I think in the
Mhm.
contract, the dynamics, right? You have
Mhm.
initial, you have further one, further
Mhm.
two. So you basically always asking for that, for those payments, let's say like that, except when it is a case of whether you spend the previous budget 70% of the last requested funds or 100% of previous ones. And we can talk about it later on because I have slides as well. I planned at the end to talk about a request for payments because this is how I wanted to present the preliminary financial report from the scratch. So this is the beginning, and actually a request for payments is prepared at the end because you have to know everything about your finances and all the costs and how much you spend and everything, and then you're prepared to request for payment. So I suppose today, near the end of our second session, we can maybe discuss further on and more about payment requests. So prepare your questions.
Okay,
So we
thank you very much.
clarified. Yeah, it's okay. Thank you. We can now.
You can continue. There is just a comment from Yasmina, who is expressing her gratitude for the pointing out that there are more acceptable approaches as you described. So please continue with the presentation.
I mean, it's nothing you cannot say strong. If they want it like that, okay. But it depends who is the contracting authority as well. Let me just go to the presentation. I mean, the idea is, to say what is the best practice, and but still it is impossible to just acknowledge all the practice that exists. It can really vary from as I said already, country authorities, their practice, and so on. So basically, this is folder 2 that we discussed. Folder 3, this is the part that procurement procedures are, and let's say the grounds for that is defined in Annex 4 of your grant contract. And there, and often recommendations are to use the Prague procedures, documentations, principles for sure. Whichever documentation you use, even your own documentation for the procurement that you have in your internal procedures and your standard practice and so on, principles, procurement principles described in a Prague is something that you cannot, it is mandatory. So this is for your national procurement procedures, the same principles. Why? So when it comes to the procurement, Prague is not prescribing anything more in terms of principle as requirement than any other national procurement procedures that you have in your countries. So that's why it is, but it is also recommended to use the documentation because the documentation is really prescribed detailing. You have simplified packages, let's say like that, for the smaller, for the single tender procedures. Sometimes contracting authorities providing certain simplified packages for the procurement, which is not the case. I mean, it is not, maybe national contracting authorities are doing it, but the delegation, UD delegations or commission are not. And it is then you are often using the procurement procedures from the Prague and those templates for the procurement procedures, which are really detailed and giving really, if you follow those instructions and those documents, if you know and understand the meaning of each document in tender procedure, you're going to do it everything by the rule, basically. So procurement procedures and application and implementation of secondary procurement procedures is another webinar, which can last also 2 days. So I'm not going to talk about this a lot, only just to refer what is required to have as a part of the financial documentation under folder 3. And why? Because one of the main reasons for the deduction of costs and non-eligible costs are actually procurement procedures, which are for certain budget lines. Actually, we are not looking anything about of another supporting documentation under certain budget line if procurement documentation is not fine and it is not implemented in line with the rules and principles of procurement. So therefore, pay attention to this. Read Prague, everything is written there, especially for the principles, and even templates are really, really good instruction, are giving really good instructions about the procedure. So what is important to have, which documentation is important to have in this folder? So start from the preparation. So tender preparation consists of the declarations signed, for example, for the preparation about your objectivity and confidentiality of the conditions of that tender procedure, market researches, justification of choice of divided tenders, because values of those tenders within grants are often single and competitive procedure for any type of contract, from service supply. Works can be one, of course, local open procedure. And I mean, it depends which grant is and what is the subject of the grant. I mean, of the whole grant scheme, what is allowed in the guidance for applicants. But anyhow, mostly it's a single and competitive. And for those, one of the most important things for those procedures is to clarify and justify who you call to participate in the tender. Why you call those companies or persons, or it depends what you set in the tender procedure, who will be the participants. You need to justify that. And the best way to justify is to do market research related to that service. Who you have, even you can use the recommendations, of course, but you need to prove that that company has. You need to set the criteria for choosing those comps, like, for example, their previous experience, that they're on the market for the last 10 years, they're available, because during market research, you can write them on your mail and asking about certain service, certain supply, asking what would be their price, whether their availability for the certain period. And often for you, it's the important thing is to get that service or supply in a certain period of time, because that's your project plan. And your activities are connected with the procurement. And often procurement is a reason for delays in the activities because of the canceled procurement procedures, for example, for the various reasons. So procurement needs to be, yesterday we talked about monitoring of the activities, financial monitoring, internal capacity of the organization, how much how they're important for a successful implementation of a project, but then you have procurement as well. And at the beginning, you're preparing procurement plan with a certain limited, information about it, with a certain plan of dates when the procedure should be launched. But anyhow, my recommendation is once you actually have a notion or you receive information that your project's going to be accepted, I would plan the procurement as soon as possible because of the all unforeseeable circumstances that they happen for the procedure. And I know that sometimes the time is really important and delivery of certain services. For example, at the beginning for you, your analysis for the baseline indicator or your analysis that are giving input for the second activities, for the selection of final beneficiaries or targeted group needs to happen at the very beginning of the project. So if you have a problem with the difficulties or certain issues in the procurement procedure, the chain reaction of delays of the activities can happen. So plan this in advance as much as possible, plan it carefully and planning conservatively, meaning planning taking into consideration all the risks that happens. And believe me, if can something go wrong with the tender procedure, it will go wrong with the standard procedure. So so justification of choice, I would say it is the most important thing just to, and this is the critical point, like yesterday we were talking about narrative report and how the selection procedure is critical. Basically of the final beneficiaries is actually critical point. And that needs to be thoroughly explained and described in a narrative report in order to justify and clarify the transparency use of that you respect the transparency principle, non-discrimination, equal treatment, and so on and so on. This is for the procurement. When you are choosing 3 companies or 1 for a single tender, because in the procedures you can choose 1, but it is always recommended to do it more in order to ensure like principle and competition. And maybe in that case, you're going to get more economically acceptable and efficient offer, let's say like that. So basically, you need to say why those 3, why this one, what were the criteria, why not the other 3, or something like that. So this is the critical moment that you show that actually you were not biased, that there is no conflict of interest. This is the second thing that is quite important for the tender procedure, even in preparation, but afterwards implementation. So the first part is preparation, and in that, let's say, and for each procurement procedure that you have, you make a folder. Within this folder 3, you make a folder for that procedure and link it to the budget line. For example, a translation budget line 5.3, for example. And then inside you make it tender preparation documentation, tender dossier launch, tender offers, tender evaluation, and contract. So in tender dossier launch, you're actually is documentation that is sent to the potential participants, the ones that are chosen in line with the transparent, non-discriminatory criteria. So you're preparing, you have tender dossier consisting of all required information for the tender dossier. I would not go more into details with regards to it because it depends, and it's as I said, it's time consuming and even different webinar. But documentation that is sent to them and proof that you actually sent to them to see with the invitation letter, and it is sent through email. So you need to have like a snapshot of the email with where it is visible, the time and date, and it should be done simultaneously to all participants in order to ensure equal treatment. And this is transparent procedure. Of course, it can be hand delivered, but that is also for that as well. You need to have some kind of receipt signed by both someone who is giving and someone who is taking the tender dossier. So then afterwards, you need to have tender offers that you receive, and of course, emails or hand deliver some kind of receipt which you receive the tender as a proof that you actually received the tender when you receive the tender. That's the idea, to see that actually tender is received prior to the tender submission deadline. And if it is last day of submission deadline, you need to put time as well, because often it's submission deadline 5 o'clock, 12 o'clock. So the offer needs to be submitted beforehand, before that. So technical financial offer needs to be scanned and electronically available. And that receipt or email, if it is sent by, if it is envisaged by the tender documentation for the attendees, for the tenders to provide the offer through email. And after that, the next phase, this is like more stages. You're preparing tender, you have documentation and send to them. You invite them, then you have their tender offers. And the last stage is tender evaluation and contracting. And there you have the nation evaluation committee, evaluation report, evaluation grids, depending on the type of the contract that you're contracting, notifications to the participants, emails, relevant emails, where after all, a board decision of the contracting authority signed by the authorized person. Because evaluation committee as idea, as a principle, is established for this evaluation of the offers. And with the evaluation report, evaluation committee is only proposing to the contracting authority, and in this case, this is you, because you are acting as contracting authority for those secondary procurement procedures. They're by evaluation report, with the evaluation report, they're recommending to the contracting authority to whom the contract should be awarded and what was the best offer. And on the basis of that, contracting authority signed by the authorized person of the organization is preparing a board decision and saying, okay, I'm accepting this or not accepting, and then you need to do it again or cancel procedure. But if you do cancellation procedure, always have the cancellation notice to send to the participants that were initially invited, to explain them the cancellation, and always have justification for that cancellation. It cannot be canceled for whatever reason. There is rules also for that. And you, as I said, everything you can find in Prague related to that. Okay, as I can see, there is Marco again is having situation with I suppose procurement documentation. So maybe we can, Marco, can you present us your problem so that we can maybe talk about this situation.
Hello again from me. I'm sorry for all these questions, but I
No,
think
this is the idea. And I'm Marco went away, but the idea is to discuss and to give your practical experience that you have, your maybe best practice, maybe your suggestions for other participants here. Also, I mean, every experience is valuable. Nothing is more valuable than the practical experience from the practice. So please do.
can you hear me? See?
Yeah.
Yes. Okay. For example, our problem is because our cost for example, for translation of some documents are more than 2,500 euros, which that means that we should have some kind of procurement for that services. And our project lasts 3 years, and we did that on the beginning of the project. And now, because of all this situation with pandemic, with the war in Ukraine, or I don't know what happened in the future.
Everything is happening now.
See, and inflation, yes, and all prices goes up. And for example, our translator could say, okay, but now my work is not 10 euros per page. Now it is 13 or 15 euros. per page. This is example. And what should we do in that situation? Because we have a contract, we have procurement procedure for that service. And we have a contract on, I don't know, 10 euros per page. And he can say that, but for me, it's the better that we should cancel our contract and make maybe another, or just cancel and that's it. And we should find another person. But that person we prefer because of his knowledge or her knowledge about our, media situation, or, all that stuff, because we need a specific supplier for
Okay.
our services.
Okay,
And
I
what
have
should we
you.
do?
Okay, first of all, the first word you use was the most important. You say we have contract. So you basically have contract with that person, and you contracted that person 3 years or 2 years ago, for example, I don't know, 2 years ago. Even last year that you contract that person, it's changes happening this year. My question is, it's not just the contract that you have with that. I mean, he needs, or she, I don't know, the contractor, let's say, it needs to oblige to the contract conditions. And this is not acceptable to, he accepted the conditions. He accepted and he gives his offer. I don't know the value of your procurement procedure, whether it was single tender. I suppose it was single. So you sent one person to give you. But anyhow, he how you say, he committed himself for that and that price. Maybe he could in that point give a higher price. My second question is, what does it mean if he raised his price? I don't know how it is budgeted, that translation. Everything is important in financial reporting and finances. So how you budget that? Per page translation, or you budget it as like contract? How you budget it?
We budget that like per page, for example.
Page,
but
right.
that is just an example. It's not.
Okay, never mind. I'm giving you as well, but this is the things that you need to take into consideration while making decision what to do. So
yes, but okay, but the second example could be for printing, which is maybe better exam, because now the paper for printing cost double or 3 times more. And when I said, okay, but you should buy all papers which you need for our, printing for all 3 years, for example, that is not under their procedure or rules, to buy and make I don't know how to say skladištenje, all these papers, like
stock, to make stock.
Yes, to make stock of all these papers. And we don't know what should we do in that situation, for example.
But anyhow, let me tell you just to finish with this first, but okay, we can go to the next, because in principle, this is similar. I mean, the way of approaching and thinking about it. And my second question is, that means that basically she's going to, or he is, the contractor is going to translate you less pages for more money. Is that acceptable to you as well? Because you plan certain translations in certain pages, and in this case, it's going to be less, whether it is acceptable for you. Or if you need that amount of pages to be translated, then you need to increase your budget line, which means you need to do a reallocation, which means that you need in that way to explain the contracting authority why you're doing it. But all of this, it is not possible with this kind of, let's say, even to do the addenda of the contract, which is changing actually the financial offer, which is not acceptable at all. I mean, it is quite difficult, I don't know. I don't know what you can agree with them, but you have signed contracts. You cannot do anything about it, and it is getting worse if you had, for example, not just one person, if it is single tender, but if it was competitive or single tender with 3 invited translators, for example, and you choose this one instead of any other, or instead of other 2. So the question is, maybe in a, you know, maybe the other two had different, and you didn't accept the other two because of their financial offer and everything, because this was the cheapest. So my question is, maybe you would have choose someone else, you know.
Yes, yes,
Different.
you're right.
So this is the problem with any kind of changes. You always need to think about initial, any
Mhm.
kind of amendments that we talked yesterday. This is applicable to the procurement. If it is changing, if you do any kind of amendments of the contract, grant contract, or your service supply in works contract, because you act like a contracting authority, is the question whether you call into question the initial award criteria. So this is a situation that I don't know. And you know, you cannot change it like that. Like, I'm not going to work for 10 euros per page. I'm so sorry, you have contract, you have your obligation. How they imagine to terminate contract because what? You know, you can sue that person actually.
Oh, yes, yes, you're
Because,
right.
yeah.
You're absolutely right. But that is our question, because we had procurement procedure for that. And you're absolutely right. Maybe we could choose another supplier, but yes, better offer. But in that time, that wasn't better offer. And the second thing, sorry, and the second thing is because now we have, I think, tendential for all budget lines. For example, all our supplier could say, but yes, and what should we do? We can't go, for example, on the court with all that suppliers, for example, or okay, that is our problem. But the problem for projects could be, okay, now we should cancel all our agreements, not all, but maybe 50 or 70% or our agreement, and you know, make again the new procurements. What we need the time for that. We need the, you know.
It is impossible to do it.
I just speak in
Theory,
theory,
yeah.
yes, because now I think that, for example, now we have and I believe also other.
It won't be
participants.
acceptable. I think the contracting authority won't accept you to terminate contract, do another procedure, and contract the same person. No, this is unacceptable. I don't know. You need to see the contract you have with that person. Maybe there is some kind of article that is actually, but this is changing, you know, this is a problem, you know, it's changing financial offer. It is not, you know, it is not that in the Prague, there is a whole section about the amendments and when it can be done, you know, the contract. So, and there is extension, cost extension of the contract that you can do, for example, or there is cost extension, and for the cost extension of the contract, there is no extension of the contract. It's the same contract, but they want higher value. It is not that they're having some kind of extension, repetition of the service, or, you know, there is so many reasons that are listed in the Prague related to cost extension of any kind of contract that needs to be followed and read. But in this case, you don't have this case. You have contract which is valid and everything is okay, but you know the contract is saying, you know, I want to change my price, which is not acceptable.
No, yes, but our afraid
So,
that we're afraid that maybe that could have influence or on quality, for example, and that is just in theory. We speak now just in theory because now we have a message from not all suppliers, not for this project, but in general, that from next year you should expect that we will increase our price for work, or
yes, they can increase, but in another contract.
Okay, yes, thank you.
If may I just add to contribute to this also conversation. Somehow very often in practice is happening that exactly what you described, like we used to work with a certain expert or service provider, and actually they of course do not understand the situation in which we are by implementing the grant contract, and it's not so easy, you know, to just change the finance conditions. Simply the only way how you are actually protecting yourself is you to think all the time from the position of the contracting authority. Like, okay, something that is for you reasonable, like, yes, we understand everything, like all prices are going up, but how we are, you know, like what the contracting authority will ask us to justify, to clarify, and what are the steps that actually we should do prior going into the, let's say, another arrangement concerning the accepting the higher price, etc. So this is just one small step to actually remind yourself every time when such a situation happens, how this will, for example, immediately reflect at the level of the finance reporting. Even it seems to us often that is, you know, like something obvious, like that, I don't know, hotel charged more because one more person joined to the, I don't know, the training. Even we actually, I don't know, planned 12 and we ended up with the 13, you know, but that's the, anyhow, the change that will also reflect at our financial report, and we will be asked why this happened and why we allow that. So think always from that perspective. It's
I can
very
just add
useful.
a little joke. Yes, Marco, finally, you can act. And, you know, as a contracting authority, they should be afraid of you. You know, you can now demonstrate the all fright that you actually get from the contracting authority. See?
Yes.
So just get into
Exactly.
that role, you know.
Use opportunity to ask clarifications. Okay, thank you,
Exactly.
Marco. Thank you,
Thank you.
Kalina. I think we can continue. Yeah.
So let's continue. So I imagine, I mean, for the procurement would have been so many questions. I mean, always there's so different challenges in those processes. So this is for the procurement, and that is the, let's say, starting point for the budget lines. Most often it's budget line 3, budget line 5. Of course, those budget lines are subject usually of the budget heading never. Budget heading 2, maybe, if they're doing purchasing fuel or some other travels, maybe, for example, because for in one procurement you can have a few budget lines, for example. So if it is you want to contract some organization that is providing you with the organization of travel or organization of some kind of other sort of events that consists also of some kind of travel costs, like for the that you budgeted, like bus tickets, or you budget certain funds for the transportation local or something. Maybe it can merge, for example, with certain budget lines for budget heading 5. Whereas, for example, accommodation or something with a budget line from budget heading 2. And that can be one procurement procedure. So procurement procedures can be more budget lines and also can be part of the budget line. But let me just remind you and just be cautious with this. I'm talking this with a presumption that it is justifiable and acceptable, and you have your procurement plan. And don't forget the most important thing: don't do the artificially splitting of the budget lines and the procedures in order to circumvent a certain procedure. Like you're doing it, you're splitting one budget line or even similar that can be purchased from the same provider, service, right? For example, service provider, in order to circumvent the tender procedure, in order to have 3 direct purchases instead of one single, or to have one single instead of competitive procedure. So basically, this is the thing that you should also think about: justification of choice of tenders, conflict of interest, all the procurement principles prescribed in the Prague and the national also regulations. It's totally the same. And then don't artificially split the procedures in order to circumvent the procedure. I see one comment related to the prices changes, and maybe that it can be done addendum to the contract, which is I would not advise to do, because it is actually changing out a financial offer without established and let's say strong reason for that. And this will be challenged by the contracting authority for sure, those kind of changes. And you should think about also how you budgeted, and at the end, if your budget value is going to be, unit value is going to be higher for the less units. And we talked yesterday, as you remember, regardless of the procurement procedure, but here it is. But if you decide to do it, you need in your financial report present unit numbers and unit values changed in comparison to the budget contract budget in the from the contracted budget. So the question is, this is deviation, this is some kind of discrepancies. You need to notify and contracting authority about that in advance, as we recommended, in order to avoid non-eligible costs. But you'll see, you cannot, without proper justification, it will not be allowed by the contracting authority. But of course, all the circumstances and everything must be taken into consideration for that kind of approval. This is, we are going now through the general rules that we, I already said that you are reporting against the budget, contracted budget from Annex 3. Consult always the budget justification in Annex 3. Exactly in this situation, in budget justification, you have like 100 pages per 10%, per 10 euros is, and then 10, it is 10,000. 10,000 euros, I think. Basically, this is how is presented budget justification, and then in your budget, so you need to give any kind of clarification for any kind of deviation changes in comparison to that. It is recommended to open the project account. We discussed that as well, in order for the funds to be verifiable, traceable, that can be identified during project implementation. As we talked yesterday, for the narrative report applies as well as a general rule to the financial report. So whatever you do, just double check it. And the best way is to have some kind of 4 eyes principle, that one is preparing and the other one is checking the quality control, in order to ensure that each sheet will be properly filled in. Do not delete Excel formulas, double check arithmetical errors. This is often the mistake in the reports, is arithmetical errors. Properly present amendments, we discussed that, minor versus amendments, addendums, which means that this is official change of the contract, and minor are just simple minor change that is, if you talk about financial report, it needs to be less than 25% of the reallocations between budget headings. So each budget heading that is affected need to have less than 25% of change of modification. And please note that those notifications and those modifications, minor modifications, need to be monitored cumulatively, which means that once all successive minor changes that you have in, for example, previous implementation period, then again you have in next implementation period, you need to monitor them, and in each and in point when they reach 25 and more, if they are over 25% changes between budget heading, then you need to send request for addendum, and it officially budget must be changed. So this is the cumulative approach, and this can often be a mistake. That just non-beneficiaries, they forgot that they have previous minor changes. Now you have again some changes, and altogether it's more than 25% between two affected budget headings. If you have changes even more than 25% within budget heading, that won't be probably even introducing a new budget line. But of course, the context and circumstances, it's important whether everything of those changes are justifiable. Double check application of reporting exchange rate. You need to follow the rules of and the instructions of the contracting authority when it comes to exchange rate. We will get to that later on. Reported cost must be without VAT. We already said that duties, charges, taxes are not applicable costs, and you have that specified in the special conditions, and so on and so on. So this needs to be exempted. And this is except for the salaries, because we said that this is eligible costs. All the social contribution and taxes related to salaries are applicable and eligible costs. EU contribution, remember, we said that all contracted budget, and your financial report, you're reporting about overall funds incurred and costs incurred during the implementation period, regardless of the source of funding, whether it's EU contribution or your co-financing contribution. And same rules must apply for both. And you see, and you know already that you basically, when you report your costs in financial report, you're getting only the EU part of that part of, you're getting only when they are verifying costs, they are accepting, you're getting only the EU part of the EU contribution of those funds. All reported costs must have documentary evidence, and we talked about that earlier, related to supporting documentation that you need to prepare in folder 2, in folder 3, or folder 4 with the financial support to third parties and financial documentation about that, bank statements and everything that is proving that actually is being done and delivered if it is expected from them to be delivered. Because for the finances, just don't forget, for the financial reporting and eligibility of costs, you cannot only verify and think about costs as such, but this is entirely closely related to the outcomes about which you are talking about in the narrative report and the activities. So for that cost to be eligible, it needs to also be accepted, and outputs needs to be accepted, and activities needs to be accepted, and the purpose of your action and output and activities needs to be fulfilled and respected. So the cost cannot be separated from the actual action and outputs and activities. So this is something that at the end, when you say, okay, the cost incurred in the implementation period, okay, cost has documentary proof, you have invoices, bank statements, okay, you have procurement was fine, everything was fine, okay, that we have reports of the procurement provider, we have, they were delivering something, we have all the papers, but at the end is, what is the output of that? Whether the output of that is acceptable, whether the study that service provider or analysis that a service provider was producing or preparing research is acceptable output. And at the end, if it is output is not acceptable, and then the whole budget line and that costs, even though documentation is fine, meaning the invoices, VAT is exempted, and everything won't be We have one question here related, are the taxes on office renting or parking space or similar accepted? We had a situation where in two countries different approach was used. For example, in Kosovo, tax on renting office was uneligible. Okay. This is about taxes. In principle, it is not eligible. So in principle, it is not, because as we said, any kind of tax contribution that is constant are not eligible expenditure. You should check your contract, that contract in Kosovo that you have with the contracting authority. Just check what is written in special conditions. That's the first thing, and I'm sure that it is written that is not acceptable. But then it depends. Maybe it is somewhere in the documentation or in guidance for applicants, or for some reason, I don't know the context. Here is really important context. For some reasons, they're accepted, but it depends. I just have
Kalina,
to say.
I just wanted to add that it would be good to hear in which case or type of the, like grant contract or under which grant scheme was accepted, because we know that it's not eligible cost. So the situation that was described from example from Kosovo project, it's actually, yes, it's uneligible, but it would be actually good if a colleague can actually share when, in which case was such a cost eligible. That would be just for the learning part of the, also from the side on the participants, to learn about that experience if possible.
Can you hear me now? Yeah. Hello to everybody.
Yes.
Yeah, we have offices in two countries, and we are doing projects in Serbia and Kosovo as well. The situation is that we are, in our practice, we are usually paying tax for office rent. And in Serbia, it is acceptable and completely eligible. And in Kosovo, we had a situation many years ago, and they didn't accept that tax. And yes, they were related to general conditions, and it is described rather confusing. It's like, yeah, all taxes are not eligible, blah, blah. And at the end, all article shows that VAT is not eligible, actually. No, not too much space for other way of taxes, So it was rather confusing for us, for the finance department and procurement as well, but the auditor didn't accept it. Yeah. An article, as I said, in general conditions was rather confused, and we were stuck, and yeah, his decision was final, and it was uneligible. But in Serbia, we had the same general conditions, but it was acceptable. It is just could it be that it is just a way of understanding the article?
May I say something? First, I would like to know who were the contracting authorities in Kosovo and Serbia?
European delegation.
In both cases, right?
Yes.
And then what is written in the special conditions, not general conditions, but special conditions of your contract?
Special conditions were referring to the article in general conditions.
I don't know what to say, maybe, yeah, but I'll definitely say that this is not eligible. costs.
Yeah.
I don't know what's happened
That is
here.
good advice. Yeah.
Yeah.
Thank you
If
for
may I just, Melissa, if may I just add, usually it is also clearly stated in the calls for applicants under the list of ineligible costs that the taxes, including VAT, are not eligible costs. That's why I said, like, it's absolutely clear that the tax is not eligible. And actually, it's interesting why was in the case of this grant in Serbia, why the cost, why the tax as such was eligible. That's actually, that's my, for example, question. That's interesting point. The example from Kosovo is actually clear because usually it's in the clearly in the guidelines for applicants and in the general conditions, and that's out of question. So practically, except those social benefits for the human resources, all other taxes are actually not
eligible.
Eligible. Yes, of course. With and here we have on this Kalina slide that in case of the VAT, you can be exempted from paying the VAT. So
Yes,
you can
for
also,
sure.
yes.
Thank you for the clarifications and
Thank
the
you.
good advice for the future, our work in future is avoid these situations. Yeah, to be at the safe side. Thank you.
Thank you. I see here,
So,
thank you very much.
Another,
Yes,
Melissa,
I wanted to say something about it. I want to just, Mila Lukic posed this question, but I would like to discuss that when we get to the budget heading 2, because this is related to budget heading 2. Just to finish general rules, and once we are on the budget heading 2, just Andrea, please remind me to discuss this question if I
about the travel costs, that one. Okay, no problem.
So let's just continue with the general rules. Double entry bookkeeping, that is for the accounting records. And we yesterday, when we listed the supporting documentation and what is important in line with the article of general conditions, one of the listed things and one of important are the accounting records that you need to have for your project and available upon request. What is needed also is to cross-check the financial documentation. So basically, but this is not to cross-check only the financial documentation. Yesterday, when we talk about general in principle about reporting, is to cross-check the compliance between narrative and financial reporting, because financial reporting needs to mirror the narrative reporting activities that you have. So the compliance of those two documents, then the compliance of the financial report and its supporting documentation. And which means when I say supporting documentation, it's not just, it's a horizontal documentation, for example, detailed breakdown of expenditures, invoices for budget line invoices, contracts, and so on and so on. So this, for example, payroll slips, that are presented as a supporting documentation and then presented in detailed breakdown of the expenditures and then presented in your financial report needs to be consistent. Any inconsistency in the report will be questioned by the contracting authority and clarification will be sought. So this is the case for ICE principle. I already mentioned a few times yesterday and again. I think that this is really good mechanism for preventing to improve your quality of the reporting and of preventing certain omissions and mistakes that are common in the reporting process. So this is the general rules. Let me see next slide. So we came to the budget heading 1. So basically in budget heading 1, this is for the general conditions, article 14.2, you have defined what is eligible costs under, and this eligible cost as such is covered by the budget heading 1. The thing that is known that all the budget heading 1 is projecting, needs to be budgeted, and that's why in the supporting documentation you're providing your project team members, defining their job descriptions, time frame of engagement, percentage of engagement, and so on and so on, and from which organization, whether it's coordinator or co-beneficiaries. So basically, they're staff that already is working in the organization. Externally engaged, if it is externally engaged, which is can be, let's say some kind of exemption, and then the whole procedure of the engagement of the physical natural person needs to be applied and respected, and all the principles of selection from transparency, equal treatment of the candidates, so on and so on. Salaries presented needs to be natural born for the staff of the organization, which means that in the moment of budgeting and preparing your plan budget, which is then become a part of your contract, like under Annex 3, you actually budgeted salaries that are let's say in your organizations are for that position in your organization for that person already exists. And often you are providing payroll slips to prove that natural born salaries, gross, we are talking here about gross salaries, because the tax and social contribution for their salaries are acceptable costs, and they are budgeted like that. My question here, I'll maybe skip to the, I'm stopped sharing now, and I'm going to open financial report once again, just to see this part of the report. So this is actually part 1.1 and 1.2 for the salaries that you present. And often if, for example, position of project manager is involved or financial manager is involved 50% of the time, and your project lasts 24 months, here should be 12, if it is, for example, 50%. If it's 50%, then it's going to be budgeted like 12 units, which is 50% of 24. And you are budgeting here, for example, full salary. Here will be done for the 2 years. This will be the total costs. So basically, for each of the budgeted staff, you need to provide timesheets that are proving that he proves actually the job, what he was doing, and the time spent on that work cost. But overall total cost cannot be changed, even the unit value, and that's why I ask if in certain changes appear, you need to discuss with contracting authority, which is often not acceptable to do any kind of increase of the salary in the meanwhile. So this is for the, let's say for the, then we have per diems here as well that can be planned for the, and of course, each of these per diems must be justified. Your budget, in Annex 3 budget, you have budget justification, and for those budget lines, you're justifying the use of the per diems. And I see now question related to per diems, whether if they're not spent, they can be relocated. Yes, they can be relocated. But just you can reallocate the leftovers to other. Please note that any kind of relocation, just bear in mind 25% for the changes between budget headings, and also any change needs to be justified and notified to the contracting authority. Strongly recommended in advance. So basically, answer to a question: what if savings are made on per diems? costs during implementation, can they be reallocated to any other budget line heading? Yes, they can. So this is the answer for the budget heading. Let me go up again. Can you see now the presentation, Andrea?
No, I see only the Excel. Yeah.
Okay.
We have 10 more minutes, so I don't know whether you want to finish the presentation about the human resources.
Yeah, I want to finish that and then we'll wrap up for the next session.
Okay,
Yeah,
we
that was my plan. Yeah.
Okay, we have one more question, but we can also discuss it. It's not related with the human resources about the VAT, but then we can reflect it.
Yeah, I saw that, but it is, yeah, but we can discuss that also on a budget heading 5. It is,
Okay.
this is, or budget
Yeah.
heading 2, it's bus tickets.
Yes.
So
Okay.
we can also discuss, I saw the question, I thought that
Okay,
later on we are going to.
excellent.
As I said already, salaries and per diem costs shall not exceed those normally borne by the beneficiary. Per diems covers meals, tips, local travel, accommodation, and other expenses, and everything is calculated on basis of night. And those per diems, they cannot exceed and never exceed the ones published by the European Commission. The thing is here, that often these per diems are for the project staff taking into action, including all the other beneficiaries, associated, final beneficiary for whom it is needed. And this is, but this needs to be clarified in the budget justification. That's why I'm always referring to budget justification. If you're written down that they are only for the project staff, not for the other, you need to introduce some kind of changes, modifications, and notify and clarify and justify to the country in order to do that. Per diems are often connected with the travels. And in order to provide clear overview of your per diems and travels, it is always advisable to prepare spreadsheet, tabular overview of the travels, per diems, who was there, duration, where, what was the purpose, and so on and so on. So this is this is strongly advisable to prepare some kind of tabular overview of the per diems, of the participants and the per diems. And of course, this is kind of supporting documentation, but this tabular overview must be supported with the actual supporting documentation like travel orders or maybe attendance sheets and so on if it is for beneficiaries or other participants in the action if they are traveling somewhere for some kind of workshops or something. So other supporting documentation also for that action, that activity implemented must support this cost of per diem. So you need to prove that actually this happens, that that person, it is in line with the budget justification, and that person is actually went there and earned its per diem. This is the question, salaries, I must say, from the whole budget. Salaries are the budget heading with the most of the supporting documentation. I mean, the most. Even so, maybe the more developed part of the budget is budget heading with all the budget lines. But the budget heading 1, it can have only like 3 or 4 budget lines, but with a huge amount of supporting documentation. Why? Because for each budget line, budget heading 1, especially for the salaries, you need to provide contract. You need, first of all, to provide decision on establishing project team, then to provide contract with each of. Please have in mind your national regulations related to the engagement contracts. You need to pay attention to this. As you remember, apart from the EU rules, and that you need to respect in your obligations and everything that is set in the general conditions, special in the general conditions, you need to oblige to certain national regulations, for example, when it comes to the salaries. So we have salaries, we have a contract or addendum to the initial contract to show that person is allocated to the certain activities and position and to function in the certain period of time with a certain percentage on for the action. And then you have timesheets to show what was being done in the implementation period and what was the role and what were the activities and how much time was spent on the certain activities by that position. Then payroll slips to show that the organization calculated the salary that was initial salary and certain percent, if it is percentage, if it is not 100%, certain percentages apply to that payroll slip, which can be shown in the financial report and which should be in line with the contracted budget and that budget line in your contracted budget. Apart from that, you need to also show that taxes are paid. You need to show that basically you have proof of that you pay taxes, salary taxes as well, and that you have bank statements also that are proving that you did the actual payment. But also it's important for the tax and social contribution that you have like some kind of tax application and so on. It depends from country to country what are your national obligations with regard to that and which documents are proving that. But in anyhow, this is quite important to show that engagement, the commitment, to show what was committed person doing through timesheets, to show the salary the calculation through payroll slip and that it is actually paid through bank statements, and you also for the taxes and salary contribution. Documentary evidence for per diems, we also say this is in most cases linked with the travels, maybe budget lines, or some activities if are not budgeted under budget heading 2, which I really suspect that is the case. You need to provide some kind of overview to be clear who, when, where, for how long, and for what purpose deserved this per diems, and everything needs to be in line with the budget, with the budget justification. And also, I already let me just repeat already that other supporting documentation supports this incurred per diem costs, which are travel orders or other a list of participants, for example, related for certain activity in your narrative report and financial and supporting documentation. So basically, I would like, let me see, I see one more comment, but I think that we can since we are starting with the traveling in the next session, I would wrap up here. If you don't have questions for budget heading 1, which is quite challenging, believe it or not, especially with the national regulations for the contracts and the taxes and payments and everything, contracting authorities needs to understand that as well while verifying your salaries, and it's a lower number of documentation because you have for each budgeted person for each month the same. So budget heading 1 is the heading with the most of the supporting documentation. So I would wrap it up here. I see that there one more comment, again VAT, but we can discuss this. Start with the budget heading 2. Then discuss with Mila about her comments related to
Monica's.
Monica, sorry, yeah, I have
Yes.
to. This
Yeah,
is,
yeah, yeah.
Monica, sorry, yeah, Monica's.
Yeah.
Monica's
Mila
and
has,
then Yasmina's,
yes.
I think, yeah.
Yeah, Mila has about the
Yeah, I answered
calculation
that,
of
I
the-
think,
yes.
Yeah,
Yeah, about the calculation of the travel cost, you will be reminded next session.
yeah.
Maybe Kalina just review them, so at the beginning of the session we can maybe respond those questions on VAT prior we start on the travel. Yeah.
Yeah.
Okay.
Okay. Thank you very much to everyone.
Okay.
See you in 1 hour from now. So let's continue. But I would first start with the VAT question, and I will call participant who actually, I think it's Yasmina that actually posed this question related to VAT. Maybe if she can present the problem, then maybe we can then discuss, I don't know. But as I understood, the question is how VAT is non-eligible cost in certain countries, or it is, and if it is recoverable or not recoverable. The thing is that there is a difference between EU countries and third countries, and the countries that are receiving pre-accession funds. So basically, for the pre-accession funds and from this side, VAT costs, honor duties, and everything is non-eligible cost. Also, in the EU regulations, I think the certain for the member states that participated in regional countries or other programs, which includes non-EU and EU countries, they have defined which costs are non-recoverable. And in that case, in general, the VAT is not eligible cost for them. But anyhow, if they refer to that article which specifies which costs are non-recoverable, they accept the VAT costs then in that case, which is not the case for the Western Balkan countries in Turkey, where VAT in any case is not acceptable, since it is always in special conditions defined that those costs are not acceptable. So this is the first part. The second part, which I would advise, is that actually whichever regional project that you have, I think that something was like that in the question. You should always consult the implementation manual to see everything about eligibility of costs. And certainly there it is written about VAT and about application of those rules with regards to each of the participating country. So let me see, I see that there is more question. Here it is. I hope that this is, let me see, this is the question. Yeah, they need to provide proof or refer to the certain amount. If you're, for example, go to your paying accommodation, which is VAT cost calculated, by default, it cannot be, it may be eligible cost actually, because you cannot, it's non-recoverable basically, because it incurred in different country when your national rules are not applied. So let me see, there is more from Monica. Okay, that's Mila. With Mila, we solved this question. Let me see this question with Yasmina. I think that they answered all of it. Let me see. Another case when the beneficiary incurs the cost in some other country. Okay, but beneficiary country is IPA country, I suppose. Is IPA beneficiary, I suppose. Yeah, that is the answer. Yeah, that is no option to recover. And I suppose the vice versa is the same. I don't know which regional program is in question, but there is other trans-regional, there is transnational programs as well. And each of those programs have implementation manual with a more precise information about application of and on VAT costs. I mean, eligible, non-eligible versus non-eligible. As I said, maybe from the regulation, as I said, maybe as a proof to refer to certain litigation which is stipulates. And for the member states country, that is for sure, they have regulations with a clear stipulation which costs are non-recoverable, so they can refer to that. And for the beneficiaries country, third countries, maybe some kind of tax administration or other regulations related to that. But in general, no costs ever were claimed as non-recoverable. Always they are treated like non-eligible costs, and they are not reported in financial reports. I don't know whether this is sufficient or you need additional clarifications. Okay, I will said. Thank you. Other question, the other question is, I remember is related, and here it is Monica's, right? So in principle, it is not eligible, bus tickets and other expenses and other taxes. No taxes, duties, or charges are eligible costs, or this is also.
Kalina, if you can just read the question on which you are
it is not.
Because it's a video recording, so others will not have idea what you are talking about. So,
they don't see the chat, right?
Yeah, probably they will not see the chat. So
okay,
yeah.
So Monica asked what about VAT in the bus tickets of participants in the events? Is VAT eligible in this situation because you cannot intervene in advance to deduct it? Well, it is not eligible anyhow, but it depends. It depends. It is basically you have to do it. It depends what is the VAT exemption procedure in your country, of course. But I suppose it should be done in advance before service or deliveries happen. And it's being done on the basis of pre-forma invoices in the tax administrations, or so, I suppose, or afterwards you're having some kind of recovery or something like that. So basically, it is not eligible. Then it depends on the procedure how you can proceed with the exemption if it is possible. So my question here is. My question here is whether those bus tickets, how they, maybe if they're part of some bigger contract procurement with merged with other services, for example, organization of something. So basically they're not, you can VAT exempt the whole contract, and actually it is contracted without VAT. So when contractor is giving you their financial offer, they're giving without VAT. So basically, if those funds dedicated to the bus tickets include in a huge service contract related to organization of certain travels or trainings outside of somewhere, then maybe this is possible to exempt and show without VAT. Because in that case, you are exempting the whole contract, not just bus ticket as such. So I am quite sure that individual bus ticket, it's hard to, because it is hard to exempt. And anyhow, this is not a cost that is acceptable. Do you have to add something?
Yes, I have actually, I wanted to add that knowing now that information and knowing in advance that this will be a problem, should actually reflect on how you will be designing your approach to management of the finances. And actually, it will certainly then reflect on how you will compose the budget, meaning how you will structure the budget. So knowing now that it is hard to be exempted from particular individual bus tickets, taking also into consideration that the actual VAT cost for one individual bus ticket might be very low comparing to the time that you have to invest to conduct, for example, the whole procedure, and it's not possible to do it after the ticket was purchased, etc., etc. So practically, you are coming to the situation that is probably impossible to exempt it as it should be, then you should consider some other ways how you can actually organize a travel for participants. And then we are coming to the point that Kalina was now explaining. If possible, then you will be organizing like a group travel for participants or a minivan travel, etc. If possible, to avoid the situation of not having opportunity to be VAT exempted. When you
Yes. Yeah, I really like the thing that you say actually, and all the things that we are talking yesterday and today about preparation of report. I emphasize that actually it's actually just the one point in time explaining what's happened in the previous year, but the whole experience you have in the implementation, your budget, your description of the action, and now with the reporting, and considering eligibility criteria, eligible costs, direct costs, and so on and so on. This is something that you should take as a lesson learned and incorporate in any future project application that you are preparing. Way, as Andrea said, way of budgeting things in your budget, the way of planning things in your budget as well. I mean, non-recoverable costs, basically, it depends on the national regulation that you have for the exemption. In some countries, you can do the recovery. You can, for example, not do the exemption in advance, but, you know, you pay and then you get recovery. But, you know, I say it depends on country to country. So basically, in some countries, if you can prove that you cannot recover paid VATs, this could be for the contracting authority proof, and proof can be either to, as I said, to refer to certain document that is saying that it's not recoverable. If you have that kind of tax system recovery, which is not applicable in non-participating countries in IPA, then or you have some kind of statement by the tax administration about that, and so on and so on. As long as you can prove, you can basically claim it as an eligible cost, which is rarely, of course, the case. In EU member states, it's a different story. As I said, principally it's not eligible, but they can easily show show evidence of non-recoverable. And also in some programs, even in the regional Europe and so on, they refer to certain regulation, but then it is actually eligible cost because it's not recoverable. So we cannot compare to that. We have to stick, you know, for the rules for the IPA countries and beneficiaries for using it. So I hope that we helped you with regards to this. Monica and Andrea. Okay, let me see. The question related to budget heading 2, and now I think that we can now, Andrea, proceed with the second question related to budget heading 2.
Yes, go ahead.
Yeah, let me tell you just the general rules related to budget heading 2, in line with the eligible direct costs explained in Article 14.2 in general conditions, status travel of any person taking part in the action, including staff of project staff, final beneficiaries, like for the per diems. Then it could be fuel, rental car costs, transportation by bus, taxi, etc. And what is important in this section is that this, I mean, in whole, basically, budget and principle is a cost efficiency that should be used in here. It is often related to choice between different transportation types, and basically to choose the most economic travel option in choosing travel, transportation, and accommodation. So this is something that you should bear in mind while implementing these costs and about implementing the activities, and on the basis of which you have incurred costs in budget heading 2. Documentary evidence for this as well like I said, for the per diems, it is really useful to prepare some kind of overview of travels, depending purpose of the travel, number, names, then to have travel orders, reports from the and other supporting documentation they can come up from the activity actually that these costs are supporting that activity. To show just a brief overview, tabular overview of the travels, personnel who travel, for how long, where, which period, what transportation type, and so on and so on. This is also, for the fuel, overview of the fuel consumption. For example, that you build, for example, bills that you bought, and then the kilometers passed, the vehicle use, car logs, which you, in case that you're using, for example, vehicles which are not business ones registered on your organization, that they're private, you need to have some kind of decision by the organization with a clear specification of the car, of the plates, and the purpose of use in order to be acceptable. There you have also bus tickets. Bus tickets you can as well budget there, boarding passes, taxi bills. And so this is supporting documentation that you need to keep with you, to have it as a documentary evidence, bus tickets, boarding passes, and the taxi bills, which actually proves that activity happens and the cost actually incurred with this documentary evidence. But exemption were applicable, of course, and but is not applicable cost. But sometimes it depends if you're, for example, engaging, say, agency for the travels. So you are having certain budget lines from budget heading 5, and budget line for budget heading 2 related to certain transportation, of course. And that contractor, for example, is not in a VAT system, then you don't need VAT exemption because they are not subjected, they are not under the system of VAT. And this is also something where you need to follow your national regulations, registrations of the company, types of the forms, legal forms of the company, and the taxation system applicable to them. So this is something that it can be different from country to country, and you need to, and this is part where also national regulation has to be followed when we are talking via VAT, because this is quite confusing sometimes. Let me just tell to Mila, hello to Mila, with regards to the fuel costs and travel costs. I'm reading now the question. I don't know whether everybody is seeing it. In case we initially budgeted this in euro per month, I mean the fuel costs, and then not euro per kilometer as a unit value. I mean unit number, and your unit number is per month, not per kilometer. Do we still need to keep track of travel log with information about distance covered and fuel consumption, or can we only submit invoices as proof of payment for travel services? Thank you, Mila, for this question. But as you can see, even so, you're not budgeted your fuel per kilometer then per month. You still need to show that actually cost incurred. But this is not enough with the invoice. It's only you have to prove that actually that cost was needed for the action. So you basically need to show where you have been, how much kilometer you passed, because in this way you can say, okay, I have invoice for 1 month, and then nobody knows where you were traveling that 1 month. So you need to show that you actually traveled somewhere, to show who traveled, to show it is also connected with this overview of travels, who traveled, where traveled, purpose of travel, kilometers passed. and so on and so on. Maybe for the calculation per kilometer, if you're using car, for example, and saying I'm using car, business car, organization's car, or private car, as we discussed earlier, anyhow, you need to show that that car traveled. So you need to provide some kind of car log, that if it is card used, which card is used. I mean, everything is, this is the whole picture that you need regardless of month. If it is per kilometer, then it's different in a way that you actually plan certain amount of money per kilometer, and then the kilometer is triggered. It's like simplified cost. I'm saying for a kilometer is this, but then when you're reporting, you need to report real costs. It maybe happen that per kilometer you spend less. So you can, because if you show kilometers passed and funds, then you see how much you actually spend money per kilometer. So there is so many variations.
Yeah, if may I add here, it reminded me of the often situation that actually I observed in Serbia was happening, and concerning the fuel. So in order to be VAT exempted, many organizations made like conducted procurement procedure and purchased like a certain amount of fuel by buying some like a card from the companies that are, you know, like providing the service and so on. And then like that card, it would be like a prepaid, and then it would be used by the staff of the organization while traveling and so on. And then what was happening at the level of the reporting, let's say we are talking here now at the interim report level. So you actually made a contract and you actually paid for the a certain amount of fuel, let's say 2,000 euros. But actually then at the level of the reporting, you have to report how actually of the fuel you spend by, for example, traveling by kilometers. So the actual cost is not how much you paid to the company from which you actually purchased that card or any other contract that you made, but actual consumption of the kilometers that you travel. That's very important to consider, and actually reflects to what Mila also asked. So you can report your expenditure of that cost per month, but again, you will have to actually calculate expenditure per the fuel spent for traveling per kilometers and etc., etc.
The thing is here, while preparing this budget euro per month, you certainly in the budget justification explains how you get to that amount. So that's why you need to follow as well the budget justification. That's the one thing. The other thing, sometimes, I mean, those types of costs related to fuel can be simplified cost option if it is allowed by the contracting authority and approved through budget clarification and while contracting your budget, I mean, while ending up, while signing the contract with you. So basically it could be set, for example, per kilometer, certain amount in 0.2225, for example, kilometer, and then only thing you should do is basically show them that you passed the kilometers and prove that. It depends on how the cost, what is the budget justification, how the cost is presented. In anyhow, if it is not simplified cost option, for example, maybe if it is unit cost per month, for example, simplified, and you say month is this is justification, and just you then show that it happens. You need to show that actually you traveled. You cannot claim cost for something that you cannot prove that actually happens. That's the point. Even the simplified cost option, they don't need other financial documentation, but you need one evidence that actually it happens. And actually you traveled, and actually, you know. So this is, again, so many different approaches, meaning the way how you what you budgeted, how budgeted, whether it's simplified, it is not simplified. And in Serbia, of course, there is, that was interesting observation, Andrea, as well. Anyhow, if it is not simplified cost option, you need to report it as a real cost. So you need to report it actual cost which happened, which can be anyhow less or more. I'm talking about unit costs than maybe initially planned, because your budget is your budget contracted, but still it is a plan which can somehow in implementation happens to vary and to have deviation on any kind of discrepancies, which can be normal if it is justifiable, but then the total value of the budget line cannot be exceeded. If you exceed the total value of the budget line, it will be cut off. So with the VAT as well here, it is as well really specific. You cannot exempt. For example, in Serbia, you cannot exempt the bill tickets. I mean the bills, fiscal bills of the fuel, unless it is organized like Andrea explained. And anyhow, as you know, if VAT is not eligible cost, you should prepare your financial report without VAT costs, because anyhow they will be deducted, and this should be applied like that. So when you're preparing costs and you realize that you didn't manage to exempt, for example, cost or whatever, then you should present costs without VAT, just to prevent any they will do it anyhow. So I hope we help Mila Lukic with our explanation. Thank you for this question. Is there any other question? Okay, video recording. That's it for now, right? As I can see, there are no additional questions. So we can then pass to the next budget heading, which is budget heading 3. In a budget heading 3, it's actually a budgeted purchase. Actually, you budget costs for the purchase of equipment, supplies, goods, and so on and so on. Interesting for this budget line that is almost always subject of a secondary procurement. Especially supply contracts. And those purchases needs to be, of course, dedicated to the purpose of the action and should be used as initially planned within the action, and should be transferred at the end of the action in line with the Article 7.5, which means transferred to the final beneficiary, local authorities, or others, but we'll get to this point in this article later on when we discuss transfer of ownership certificate, which is should be provided and available with the final report. So basically, this is it is clear enough that it can be budgeted for different items, or maybe, and those different items budgeted can be purchased through one procurement procedures or more procurement procedures. It depends how similar the articles are. Documentary evidence that you should prepare with this equipment, apart that this equipment has delivered equipment, needs to have adequate visibility respected. So first of all, you have procurement that needs to be implemented properly with all principles respected. Then you have delivery notes, provisional or final acceptance, which should cover maybe installations, certain trainings, and so on and so on. And that is what you want from the supplies needs to be defined even in the early stage of procurement. I mean, in the tender documentation in the procurement, which warranty do you want, commercial warranty, duration, installation do you want, which kind of where the equipment should be installed, for example, maybe training for the use of equipment and so on and so on. It really depends of what equipment is. Sometimes the equipment is something not applicable to that approach. Then you need to have, as I said, delivery, provisional, final acceptance, then invoices with the VAT exemption if it is applicable, and bank statement showing that actually delivered and purchased equipment, supplies, goods are paid. Depending on the program, but certainly for the upcoming this financial perspective, I think a certificate of origin is not applicable anymore, but it was for the previous until 2020 it was applicable. So if someone still has projects under implementation and finance under a financial perspective 2014-2020, then certificate of origin is certainly applicable for the equipment above 1,000 euros, if it is your case and your grant. So basically, here equipment is the most common mistakes is here presentation of the invoice and specification. Here you need to pay attention that actually specification that you required in your procurement documentation is the same one in their offer. So on the basis of that, they are providing you offer. And on the basis of that offer, technical offer provided by your tenderer, invoice should be, and delivery note should be the same. So technical offer of the tenderer, if it is procurement procedure above 2,500 euros, then invoice and delivery note should specify the same item. So there is a need of consistency between the documentation and everything, which is for the procurement. Here is important not to stipulate brand names, of course. And if you stipulate something that needs to be provided due to some kind of compatibility between the equipment that you already have and that you are purchasing, you need to add wording as similar so that competition can be broadened, let's say like that. So consistency of the documentation is important. Don't forget that basically when you purchase something, contract authority may come to on-the-spot check and check actual use of that equipment, especially after final reports. When on-the-spot checks are conducted, in practice, it can be shown that especially IT equipment like laptops, even if furniture, is not used for the initial purpose, and it happens that it is not the intention and purpose of that equipment is not sustainable. And this is something that is quite important for the action and for this budget heading in order to be eligible. Is there a question? Let me check this. Oh, no. Okay. So this is related to equipment. And as you can see, their transfer of ownership. So for equipment, any kind, or vehicle, for example, it's for vehicles as well, it's important and for any kind of equipment to just follow national rules where it's needed. And that's it. I think that this is the transfer. One more thing is important: the maintenance of ownership of that equipment. So it should be clear who is going to maintain it and own it at the end. And that's why the transfer of ownership exists, to tell us who is then owner of the purchase. And it should be by a rule, final beneficiary, or But we'll come to that as well when we go through the relevant article of the general conditions related to transferring ownership. So this is a budget heading 3. Budget heading 4 is project office and covering cost related project office where project activities take place and project staff assigned to the action in that location, office rent, utilities, depreciation costs, rental costs, lease of building equipment, assets, and so on and so on. Documentary evidence for this is lease contract if it is renting, but it should be checked during implementation whether the actual lease contract address and everything is in line with everything must be in line with the real events on the bill. Invoices, bills, specification of incurred costs, and so on and so on. So all the costs budgeted here and approved by accepting your project in a budget needs to be as well justified, and budget justification needs to be followed. So whatever you envisage under this budget heading and explaining your budget justification should be following your reporting in the financial report. Budget heading 5 is budget heading with actually let's say subcontracted service providers, and this budget heading is usually the one with is more developed than others with a lot of budget lines presented in the budget. This could be various kinds of services, expertise. On the budget heading, you can also engage natural persons as well through proper, transparent, non-discriminatory procedures. And also, if you're signing contract with a natural person, all taxes and contributions can be eligible costs since it is natural person in question. So this is visibility also should be respected here, and any retroactive service contracts are not acceptable from the previous period. As for the supplies, when you have services on the budget, you need to have, if they're more than 2,500 euros, you need to prepare procurement documentation, implement procurement a procurement procedure, and then follow on the basis of the contract signed with the subcontractor, follow delivery of the outputs, the quality of that outputs, if tender documentation, a contract with a subcontractor to especially define dynamics of payment as well as reporting requirements, especially for the services. If it is envisaged for service to last half year, depending what is required, then you need for sure establish some kind of reporting scheme or dynamics in order to monitor and follow what they did, even to provide you with the timesheets if it is. Everything, it depends on how it's budgeted. For example, you can, if it is per contract, that's a different story, but anyhow, if you're engaging someone and for service provision as a fee-based contract or global contract, it differs, of course. For the fee-based contract, it's important to have everything. The contract is monitored on the basis of the time spent. So timesheets, often number of days envisaged are envisaged in the tender documentation, and then the subcontractor is providing offer and financial offer with specifying cost per day. So basically, you are following and monitoring implementation that service requiring, apart from the report and team sheet of the expert who is delivering that service. So the thing is, with the budget heading 5, whatever and however, it's important how you budget that service. What is your budget justification? On the basis of that, prepare your procurement procedure. If you realize that your plan wasn't good, so you need some kind of changes of the budget line, just do it. Just inform contractor team, consult them, and if they accept that kind of changes, then get into the procurement procedure. And depending on how it's budgeted, it can be global, or fee-based contract. If it is fee-based contract, that is clear that you need to contractor in line with that, in line with the way of your budget. Of course, budget heading 5, depending on the service, can merge a few budget lines with regards to certain service. So maybe you budgeted different kind of expertise for development on one study. So maybe you can make one procurement procedure requesting three different expertise and ask for specific qualifications of those experts. So, and for the for this budget lines under budget heading 5 to be acceptable outputs and the quality of outputs that we talked yesterday during our discussion about narrative report is quite important. And one of the let's say main points for accepting those costs under budget heading 5.
We
Hello?
have a question.
Yeah. I see here, Flavia, hello. Is it appropriate to share the same budget line, recruitment of training expert service based, with other partner? Yes, it is. If it is allowed, is there any restriction on which will do the procurement procedure? Let me tell you, first of all, I think everything of this is allowed. It just as a matter of your organization and your project proposal, how you envisage involvement of your partner, how your partnership agreement looks like, how you divided budget. So basically your partner can, a co-beneficiary can do the procurement procedure, but in a partnership agreement somehow must be reflected that the part of the budget you are actually transferring to your partner in order to proceed with the procurement procedure. And because if you're a co-beneficiary and your partner is having a procurement procedure, a certain amount of your budget needs to be transferred because their contracting authority, they are in charge for those costs incurred under that procurement procedure. So, of course, that one budget line was, for example, it depends, of course, on the context and justification, which is certainly, which you certainly have in your budget justification. But for example, in the same budget line, you have, you need to purchase something or you need certain service, but your partner is in different country, for example. So they need to do for the same service, maybe different procurement procedure in their country, in their language, and therefore the service, similar or same services, but on the eligible territory for your core beneficiary or partner in the project. So basically it depends, of course, on circumstancing and the context of the whole story. Sometimes it is not accepted. It depends. But in this case, like this example, it is quite possible, and it is not possible to do it in any other way. Basically, if your partner is in another country. If it is allowed, is there any restriction which will do the procurement? There is no, as I said, restriction. So, but then you have to, while planning and preparing the partnership agreement with your partners, and of course, while preparing projects in advance, you know the capacities and the areas of expertise of each of your participants partners in that grant contract. So basically, you can divide the tasks and responsibilities given that experience. And also, it depends. For example, if your partner is whatever area or sector of grant contract is, action or activities, if your partner is dislocated in a different part of the country, which is far away, and they want to organize something in their part of the country. So it is quite rational and justifiable to have separate procurement procedure for that event, which is far away. It is not. It is not justifiable to do it, and maybe it's more expensive if one partner is doing the procurement procedure with all trainings or different locations throughout your country. So basically, that is also a point for discussion. And whatever you do, it needs to be very justifiable. And please do consult your contracting authority for the specific cases in order to avoid any kind of non-availability of costs. I hope I'll help you, Flavia. So while we are waiting for another question here, Andrea will interrupt me. I will continue with budget heading 5. The question also here with budget heading 5 is about timesheets. Any timesheet, including the timesheets prepared by the project staff up in budget heading 1, even the budget heading 5 timesheets needs to be signed. Like all documentation, in financial documentation needs to be signed by the authorized person. Timesheet needs to be signed by the person who is actually delivering timesheet, and the project manager, and then authorized person, if project manager and authorized person are not the same. So basically, this should be this is the best practice, how it should be. So pay attention on the, even though it sounds so formally and not so relevant, believe me, in practice, it is quite relevant, and it showed that it can make the contracting authority have lots of clarification with regards to that. So if there is question, okay, Andrea would prefer to talk.
Yes, sorry, it was a confusion. It was our internal confusion because of the copying the communication from yesterday, and it was similar comment like from yesterday. So we will now give Andrea possibility to actually talk. Sorry. Andrea is here, yes.
Hello, can you hear me?
Yes.
Okay, great. So it's a case that happened for me. We signed a grant contract already in July this year, and the implementation period started on the 15th of September. And our first event was on the 21st of September. And so in order to avoid high flight ticket prices, some of the participants already booked and paid their flights before the implementation period started, but after signing the contract. Although I informed them in advance, otherwise they should wait, but they didn't. And now my question is, what exactly is the time of incurrence of the cost? Is it when they booked and paid the flight, or is it the flight when it took place? That was, of course, within the implementation period.
Yeah, this is really good question, I have to say. But I would say that this is actually, did they pay prior to start of the contract?
Yes, they did. They paid maybe, let's say, at the end of August, and the implementation period started on the 15th of September.
Let me now share the document with you. Let me see, general conditions. Okay. Do you see this on a site? No, you don't see. Sure.
No, I don't see, I only see you now.
Okay, okay. No, I'm trying to find, let me see this. I want to share general conditions with you.
Yes,
That's,
I also consulted the general conditions, and it says it has to, the cost should incur inside or they should be connected to activities within the implementation period. The activity took place within the implementation period, but it's a little bit tricky, this situation.
yes, that it is a little bit tricky. I would say they, because they were booked and paid prior to the implementation of it is not, I think it is not acceptable.
Not ill. Okay,
Yeah.
okay. Mhm.
But anyhow, I would suggest you maybe to ask contracting authority about that, to give your justification, to explain. I'm not sure that they are going to accept that, but maybe you should try. Unfortunately, it happens just before the contract signature. That's the thing. So
No, it
the
happened after the
retroact-
signature. The signature was already in July. So the contract was signed, but the implementation period didn't start.
Yeah.
So that's
Maybe I'll think about this once again. I think it is not eligible, but
Okay,
let me
okay.
think.
Mhm.
And because we are preparing question and answers anyhow, written ones that you are
Okay.
going to be
Mhm.
provided after the webinar, you will find our answer with regards to this as well in that.
Okay,
So
great.
maybe I'm going to broaden and maybe explain and justify why, and to refer to specific article of the general conditions that applies to this situation. So it's
Okay.
really good question, really.
Yes, and now I have the problem. A lot of people, I already told them it's not eligible, but it's not a nice situation. So
Yeah, I know.
to-
It is not. But anyhow, I'm gonna think about it, and then we will propose our answer to this question. It would be good if you can, in the chat, write down your question.
Okay.
Just
Mhm.
because we are going to take all the questions from the chat, and it's good to have it written just in case that we didn't misunderstood something,
Okay.
misunderstand. So basically give us this date, say where the contract is signed, when the implementation period starts, and I'll think about it. So maybe
Okay.
we'll see.
Thank you. Thank you.
Thank you. Okay, so Andrea, we can continue, I suppose.
Yes,
Of
yes,
course.
go ahead. There are no questions. Yes.
So this is budget heading 5. I think I said everything that is important within budget heading 5. I mean, the most challenging thing is for sure is procurement, secondary procurement, and all confusions and all is about the secondary. Even the implementation and delivery output is actually connected to secondary procurement. Because when you say procurement, it is not just that you launch the procedure, send tender documentation, receive offer, evaluate, and then you sign the contract with the awarded contract to the selected one candidate. The procurement actually lasts until the end of the contract that you sign, because you didn't purchase anything until the end. You didn't procure anything until the end of the contract that delivers your service, deliver your supplies or works. So basically, everything, don't forget that when you have procurement documentation and procurement procedure and you sign the contract, you need to follow the contract. You and the subcontracted service provider. So everything needs to be in line with the contract. It is not reporting, payments, any changes that needs to, like for your grant contract. If there is any kind of notification, you need to reflect it, or through some kind of notification, administrative order, or through the addendum of the service contract. So basically, Don't forget this, and that's why the compliance with the documentation and between documentation is quite important. From the preparation, then their technical offer, their financial offer, and then their implementation, timesheets, their delivery of outputs, quality of the outputs, invoices that you need to provide with a certain specification of delivered services, and so on. So this is for the budget heading 5. Budget heading 6 often is for works. Budget heading 6 covering costs which are not considered elsewhere: construction, reconstruction, renewal, other works. Visibility requirements are also here for the works quite important and should be followed from the construction side, and how you mark and you put construction boards, with all required information to the final works and visibility those final works. All permissions related to works, if we talk about works, and budget heading 6 is works mostly, they need to have all permits and everything again in line with the national regulations. For the start of the works, and suppose in the assessment of the application, various assessments of the application, they need to have some kind of permits for those reconstructions, renewals, and so on and so on. So everything what is prescribed by the national regulation, they need to follow. And for you to accept those works within project, they need to provide you also, you need to provide, to be accepted, to provide certain permits, provisional acceptance, final acceptance, and also the technical acceptance of the supervisory engineering. It just depends what kind of works you have under your contract. Permit for use, of course, maybe if it is kind of construction of certain houses or any kind of construction, you need to be connected to the electricity, to the water supplies, so on and so on. Here, apart from the invoices, bank statements, that is for each of the budget line with a in financial report as a supporting documentation you need to provide. But again, as for services or supplies, you have, procurement documentation is something that can be quite challenging, especially for the works, and whole the procurement procedure can be quite challenging. And you can see, I saw so many examples where actually because of the procurement procedure, especially in works, the whole action is delayed a lot. So basically, and it's not just that you launch procedure, maybe not on time, maybe with a certain delay. It's just that whole procedure is taking time. The result of the procedure, sometimes it's not feasible, and maybe even procedure can be canceled. And on the top of it, when you contract an award contract to someone, the implementation of the work contracts is full of challenges, and it's quite difficult. And so basically, while you're planning works in your budget, you should also consider in your budget justification to calculate the contingency and the risks that can happen actually in that for the works contract. So basically, in the price and the budget, you need to calculate the contingency for the works, which is not the same contingency that we have in the budget up there below direct eligible costs. So just calculate those risks while planning your budget for the works. And don't forget, it depends on works, national legislation and everything, to plan supervisory engineer for certain types of works where it is needed, of course. The most challenging for the works, and that's why it often is delayed, is the project for the works. So project documentation with the bill of quantities and other, depending what type of works you're seeking, can be challenging and can sometimes lead to the omissions and the problems in very implementation because they are not envisaged in the preparatory stage and project documentation, and which is not acknowledged by the contractor who actually gave his technical offer and financial offer for those works. So be careful. That's my let's say recommendation when it comes to works. Just think it through and plan with the risk. Always plan with the risk of delay in order to properly plan your time frame of the overall project. But sometimes works on the basis of works, other activities are pending and other activities are waiting for the finalization of works. And we saw that sequencing of the activities in planning your projects and budgets are quite challenging and needs to be set properly in order to ensure successful implementation. Budget heading 8 is indirect costs, not exceeding 7%, and it refers to the administrative costs. There is no need for supporting documentation; it is not required. But even so, costs that incurred under this budget heading needs to follow all eligibility criteria that we discussed yesterday, and maybe we can go through them, those eligibility criteria once again, because they're quite important. One more important thing is that costs incurred under this budget heading does not include costs already declared under another budget line. Any kind of double financing is simply forbidden. In the practice, often this this percentage is not, it happens that it's not applied properly. Then, for example, it happens that your financial report, you're changing something in the financial report, but forget to apply the percentage on the new total amount of the eligible direct costs. And then indirect costs are not presented properly. So at the end, when you finalize your preparation of financial report related to direct eligible costs, just once again check application of the percentage for the indirect costs. Budget heading 10.1, contingency reserve, not exceeding 5%, and this is rarely planned, and it is explained, I think, in general conditions and in other instructions by the Commission. This is extremely extreme circumstances, and it needs, and if it is budgeted, because those costs must be approved, actually in very call for proposal somehow must be allowed, and then in a very budget clarification approved by the contracting authority. And for use of contingency reserve for certain circumstances envisaged in the call and also in the EU regulation, approval of the contracting authority is mandatory. Of course, prior approval of the contracting authority is mandatory. Please note that this is not the contingency related to works contract, and that's why I emphasized that while planning costs for the works, please do consider within the budget line related to the works, consider contingency and all the risks possible, which should be, of course, reflected in the contract signed with the subcontractors who is delivering the works. Volunteer works, budget heading 10.2, this is something that it's not usual. This is something new, let's say, like that, at least in general conditions, but this is something that I suppose it's not widely used. But anyhow, it's important just to know this is the thing that as contingency, as simplified cost option as well, needs to be known in advance. So basically it is allowed by the call for proposal, allows for volunteers' work to be considered as accepted for co-financing. And this is basically work provided by third parties without remuneration, being paid to them by the beneficiary, and this can be counted, their work can be counted as co-financing. Of their budgeted simplified cost option per unit, unit cost, I think in budget is per day, that is how it's envisioned. But it needs to be predetermined by the contracting authority in the call for proposal, and it is separate for the direct costs and calculation of indirect costs. This volunteers' work cannot exceed, can be up to 50%, cannot exceed 50% of the beneficiary contribution, meaning the beneficiary's co-financing. Any eligible costs that incurred in relation to the work of the volunteers, for example, travel, accommodation, can be deemed as eligible costs. And this is for the eligible cost. And this, as I said, it needs to be allowed by the call for proposal and predetermined by the contracting authority. The thing is, with the simplified cost option, this is something that that is used, I suppose, especially with programs that include member state countries, and it's quite it's easier to then manage and monitor implementation with some kind of simplified options of the costs, which are predetermined. And this simplified cost for the ones who have simplified cost options in their budget or planning to do it, if it is allowed, and usually it is allowed by cost for proposal, even predetermined and more clarified, and give some kind of instruction by the contracting authority, and encouraged for the certain budget lines maybe can be obligatory if it is set by contracting authority like that. They can be lump sum, unit cost, and flat rate. They can be applied to one or more budget headings or budget lines. Salaries, budget heading 1, for example, can be flat rate. Simplified cost option. Fuel can be, for example, as well, simplified cost option, or others also, it will depend. Documentary evidence for those kind of costs are actually should show that costs incurred and or outputs have been delivered. That is the most important. You don't need to provide financial documentation. It is not required unless unless contracting authority has some doubts and then request additional documentary evidence. Important is that same cost eligibility criteria needs to be followed for the simplified cost options as well, and ensure that there is no overlapping of the costs. So this is any kind of double financing is not allowed. So as I said, salaries can be, for example, part of the simplified cost option. Again, this depends on the call for proposal and from call to call, but you can use it in your budget if it is envisaged like that. And then you need to show the contracts, signed fees, documentary evidence of activities implemented, but there is no need for payroll slips. Travels, for example, travel orders, reports, overview of travel and purpose, and so on. For the fuel car log, overview of kilometers passed. So this is briefly how it can be used, and if it is allowed and if you use, this is how you may report about it. They're usually in the budget, and you know as well, are marked with the cap letters. So with the cap letters like lump sum, unit cost, or flat rate, in the column, which is actually the name, which is actually the title of unit. And then let me just share once again. Once again, we're going to share the financial report with you. This is financial report. here it is. So basically, when I say, for example, when I say for the simplified cost option, for example, it could be like this. So it is written, sorry, it is written here. This is just example. So unit cost, a big caps, I mean, the letters. So when we talked about each of the budget heading, main budget heading in the report, which is human resources, travel, equipment, supplies, project office, other cost services, and SEX, which is other. And we talked about works. Then we have here eligible costs, volunteers work. As well, we have talked about contingency within the contingency reserve. So basically here, in order to prepare all of this, we talked about what is eligible under each budget heading, how you should present reallocations, which documents should you prepare for each budget lines, what are the main, let's say, what is the best practice in preparation of the report. But in order to fill in each of these columns, these columns you're taking from your contracted budget. But anyhow, to prepare these columns, whether it's interim or final report, you need, you are doing it on the basis of a detailed breakdown of costs. And now I'm going to share the detailed breakdown of costs with you as an example. So basically, why it is the basis? You're putting there initial or further pre-finance. You're giving the date of payment. You're saying which budget heading. This is the chronological order of the cost. For example, for budget line 111, you have salary for November, reference document, you put which reference document. For example, payroll slip for November or other. For example, you can put timesheets as well. Documentary date of document, bank number of bank statement, then you put costs that actually incurred then on that payroll slip, or they're incurred in relation to the project if it is certain percentage of engagement of that person. So you put here in the national currency that you use, then you have exchange rate that you use for the reporting, and then on the basis of that, you calculate amount in euro. As you can see, if you have here the amount that is paid by the contracting authority, EU contribution as initial pre-financing payment, then in the following rows, actually, it's each cost is deducted, and then in each moment, you actually know how much money you actually kept at your disposal. So this is the chronological order, and it also helps for the exchange rate, because then you see if it is exchange rate, you know where to apply it depending on the costs that you have, the cost that incurred. On the basis of this, you are then entering budget lines and budget heading. For example, you can here select and say only budget heading 1, and then you see the all costs for the budget heading 1, and so on and so on. And it also needs to be in compliance with the documentary evidence and supporting documentation that you use. So this is the document when we discussed all about the financial report. And in order to prepare that financial report, everything that we talked about, you can summarize here in the detailed breakdown of costs. And on the basis of that, fill in the cells in a financial report. And this is the document that you need to send to contracting authority in an electronic version through email as well. And I'll go to the presentation. This is, as I already said, this is then a chronological overview of the incurred costs, description and everything about each of the costs. This, on the basis of this document, you cross-check other documents. And consistency between financial report and the detailed breakdown of costs is quite important. And then related to the supporting documentation. Again, 4 ICE principles advisable in this case for the preparation of the report. In order to prepare this, and of course, in the detailed breakdown of costs of expenditures, there will be expenditures of your co-beneficiaries if certain funds are transferred to them in order to implement their part of their activities that are, and thus they are delegated to them. So basically, they need to prepare the detailed breakdown of expenditure as well for the costs they are managing and the funds they are managing. And for the reporting purposes, they need to provide to coordinate all of it together with the supporting documentation. On the basis of that, coordinator is preparing the overall detailed breakdown of experience that will be presented to the contracting authority with the related. And then on the basis of that, you prepare the final report, which consists of all incurred costs in the implementation period by the coordinator and co-beneficiaries. One of the, let's say, challenging thing, and I might say, beside the VAT application, is also exchange rate application. And first thing that I can tell you is follow CA instructions. So on the basis of CA instruction, you should, it depends, it varies, the application on a program, on a contracting authority, on a country, on a different, but the thing that we are talking now that I will present is basics and basic principles that should apply. So everything that is reported here within your project should be in euros. So if your country, if you're if your national currency is different than euro, then in that case you need to apply some kind of reporting exchange rate. The thing that is a reporting exchange rate is actually the contracting authorities is exchange rate on a date when the contracting authority's contribution was recorded in the beneficiary's accounts. And that is something that is, unless otherwise special stipulated in the special conditions. And this is something that it is actually written in the general conditions. So basically, the reporting exchange rate is exchange rate of your last installment received by the contracting authority. But how to apply this reporting exchange rate? We'll get to that. You're applying it by if you have initial pre-financing and you have certain contract exchange rate related to that first initial installment, then you use that reporting exchange rate until the value of until the cost for the cost up to the value of the initial pre-financing installment. Above that value, actually you are using the second exchange rate for the second installment. I'll show you that on the next slide. And what is that exchange rate on the date of CA's contribution when CA's contribution is recorded in beneficiary's account? Is basically can be, as I said, it can vary. It can be info euro or accounting practice of the beneficiary. Some countries, it's like middle exchange rate of the relevant national bank on that date when the contracting authority's contribution was reported in the beneficiary's account. So that's why I'm saying just follow the instructions and see which practice they are applying, and it depends on the program, of course, and the contracting authority. And that's why at the beginning I said that one of the documents that you need to provide is a bank statement with the installments of the contracting authority within the supporting documentation, just to see the date and to see the possible exchange rate. Any exchange rate losses are not non-eligible costs. And application of this depends, as I said, on different kind of, and this is actually, that's why I said we'll come back to how you apply that exchange rate. when you contracting authority, when, for example, your grant has only one contracting authority's installment, which is initial pre-financing payment, until submission of the deadline of the report, then you have one reporting exchange rate is used for all costs incurred. That's the case when you have only one installment. In case that you have two installments, for example, initial installment and then further pre-financing payment until the submission of the report, then you use two reporting exchange rate. First reporting exchange rate is used, it's of course date when CA's initial pre-financing payment was recorded in a beneficiary account. So you're using that exchange rate for the costs incurred up to the amount of the initial pre-financing payment. So if it is first installment was 100,000 euros, then reporting exchange rate will be one for the costs incurred up to 100,000 euros. And of course, and that reporting exchange rate is on a date when contracting authority's initial pre-financing payment was recorded. For the second reporting exchange rate will be for all, of course, exchange rate on a date with contracting authorities further pre-financing payment was recorded in the beneficiary's account, but for the costs above the amount of the initial pre-financing payment. And this is something that is in principle applied, but of course you need to check with your contracting authority whether they use this kind of application of the exchange rate. And that's why I showed you the example of detailed breakdown of costs, because expenditures, because there you can easily monitor to which amount for which cost you need to use first reporting exchange rate, and from which cost you need to use second reporting exchange rate. Do you have any questions related to reporting detailed breakdown of costs and exchange rates? I would say no. Okay. Then we can continue to transfer of ownership. If you remember, I mentioned transfer of ownership related to supplies, and General Conditions Article 7.5 and 7.6 are articles related to transfer of ownership, but that is obligation of the grant beneficiary to provide the contracting authority with the transfer of ownership. Actually, this template you have in your grant contract under Annex 9. And you do it for the vehicles, equipment, supplies, and as it is stipulated in the general regulations, it should be done to the final beneficiaries or local authorities, local beneficiaries, local authority entities, and other action funded by the EU. In case the beneficiary actually is not transferring any of these equipment, supplies, vehicles to these listed final beneficiary or local authorities and so on, they're actually retaining the ownership. They need to submit approval to the contracting authority an inventory list of those items they are retaining and propose their future use, and just explain and justify how they will be used, since they are not transferred to the ones that are actually maybe purchased for. So this is quite important, and often in practice, the grant beneficiary don't understand this article 7.5, 7.6, and they're doing transfers to themselves, which is not needed. Transfer is being done to the final beneficiary, which is the best case scenario. So basically something is purchased for the action and for the beneficiary target group, and then you transfer to someone who is actually, the idea is to continue to use that equipment for the same purpose, But in case that it's not happening, it needs to be justified, like everything, you know, in the implementation and kind of the changes, and to request approval from the CA with the list of inventory list that it is allowed to just retain the ownership. The thing is that this transfer must be submitted to the contracting authority at least with the final report. That's why I say it's important to be with the final report, but you can do it earlier with the interim if it is okay with you. But for the purchase of the purchase of more than 5,000 euros per item, which means for a car, for sure, you have to do it and submit to the CA, or some kind of machines or something that is per item value is higher. And grant beneficiary, that you don't need to give it to the contracting authority if per unit is less than 5,000 euros. But the thing you need to do is to keep it in your records on the spot. What you should do also with regards to this in your narrative report, in the activity related to the use of that equipment and in which activity that equipment is used for the purpose of the action and for providing any kind of outputs, results, you need to explain how this will be sustainable and how it will be used in the future. Anyhow, regardless whether you are submitting transfer certificate to the contracting authority or not. So if your unit value is above 5,000, you need to submit. It is less than 5,000, then you for sure you have to have it. You have to prepare it, but you are not in your records for on-the-spot checks, or if contracting authority asks you to provide a transfer on ownership. If not, you need to just retain it and keep it in your documentary evidence, your records for any future requests. So this is about transfer of ownership. Related to expenditure verification report, we mentioned at the beginning as well, one of the horizontal documentation, the general conditions 15.7 is related to this. You need to know that for certain contracting authority may decide that for example, grant below 100,000 euros and duration of a year, they don't, and mandatory for the grant contracts above 1,000 euro, along with the final report. But if it is less, it is not mandatory, which means the detailed breakdown of expenditure is something that is mandatory, quite important for the grants of the lower of this value less than 100,000. Also, this TOR and template of that report that should be prepared by auditors is under Annex 7 of the grant contract. So, expenditure verification report is prepared by the audit company. That you have two cases that are specified in the special conditions. So, I think special conditions article 15.7 that it's actually referring to this general conditions article is basically saying who is going to do the audit, expenditure verification. In certain cases, it is being done by the very grant beneficiary. So if you, and in principle, you are budgeting certain funds for this kind of reports. So in your reports, you can have, and your financial report, you can have this budget line dedicated for the expenditure verification. And in the special conditions, it is indicated which audit company is going to provide you with this report and implement expenditure verification. In the moment of approval of your project and budget, contracting authority is verifying the credibility and whether audit company proposed by you is acceptable. And if it is yes, they just leave it in the special conditions, although they can request changes or clarification with regards to that. That is first option. And you don't need, if you're budgeting this if in your budget you have this budget line for the expenditure verification report, you don't need to apply any procurement procedure, because it is predetermined even in special conditions who is going to do it. But what you need to do is to give them the TOR to know their scope of work, And the templates they need to fill in line with the Annex 7 of your grant contract. Often in practice, sometimes, I mean, this template is not followed and it's not, then that report, it's not acceptable. So check what is written in special conditions because of the second option. In the second option, and I think in advance it's not. Basically, in the call for proposal, they indicate which option to plan. A second option is where the contracting authority is engaging the audit company who is doing the expenditure verification for the whole grant scheme, including your contract. So basically, it's a different approach. Just check your special conditions to see how it was envisaged, but it did happen that you don't plan those costs, and in that case, and contracting authority and audit company that is contracted by the contracting authority is performing expenditure verification. For the grants of 5 million euros and more, it is required with each interim report. Otherwise, it is only required for the with the final report. And these costs, like evaluation report costs that you budget. For example, if you have in your budget and your audit and the audit company specified the special condition is performing audit, expenditure verification costs can incur after implementation period, like evaluation costs. And as you remember, general conditions cost eligibility criteria allows those costs to be incurred even after implementation period. So this is the one of the costs that actually can be paid after implementation period, which is not okay, but the whole service is performed after implementation period because it is impossible to be done during, because it needs to verify all expenditures incurred during the implementation period. So this is related to expenditure verification report, and this is then we finally, when you prepare everything, meaning that you go through the budget amendments, relocations, each budget line, collect the supporting documentation required for each budget line, and then you come to the detailed breakdown of costs that you need to fill in chronologically each report, each cost. And my advice is to, from very beginning, to start filling in detailed breakdown of expenditure, and it can be used, and you can use it for the monitoring as well. How much money you have, how much you spend, application of the exchange rate, and so on and so on. So when you prepare all that, have all the supporting documentation, you have detailed breakdown of costs, you give everything also to the expenditure for the final report to the auditors to verify your costs as well. Prepare transfer of ownership if there is any, if it is applicable. And when you see the whole picture and you're prepare on the basis of that your financial report, prepare the cost incurred the last implementation period, cumulative costs from the previous period, and then all costs all together, then you are basically preparing your payment request, which is again template from your contract, which is Annex 5 of the grant contract. All information in payment of request, you need to have contract in front of you to see what is stipulated in Articles 3, 3.2, and so on, and to see how the initial pre-financing and further pre-financing payments are planned. Double check all the information in the payment request. Often happens that it is actually not used from the contract, and everything that you are using and that you communicate in the best way is to consult your contract and even refer to the article of your contract. It is something that is most important. The account that you are stipulating the payment request must be the one also, I think, in Annex 5, and that you submit together with your application in the contracting stage is financial indication form. So in that form, you stipulate your account number, and if it is during the implementation period changes something with regards to your account, which can happen, of course, you need to update this and notify contracting authority and submit a new financial identification form. But because this is the relevant, and this is part of the contract, so you need to do it. And this is the information that contracting authority is relying on. So basically, check once again. Maybe you changed or forgot to inform contracting authority, but at latest with the financial report, you can do it and send one new with your payment request. Today we started that discussion about payment request and how to prepare payment request, but certainly for further pre-financing payment, it is finer to check whether your expenditure actually incurred, which are financed by the CA, is more than 70% of the previous payment and 100% of any prepayment before that. So if you have two interim payments, that it means that you had to spend all amount of your initial pre-financing payment and at least 70% of your first further pre-financing payment to request second pre-financing payment. So this is how this should be understood. And if it is not, you need to deduct the difference between that 70% of the pre-financing payment and the part of the expenditure actually incurred. And you are going to get, you need to request without that difference funds. So you need to deduct that difference for the request, for the payment request. And one thing which is forgotten by the grant beneficiaries, often they're struggling and worried about this 70% of the spending of 70% of the previous financing payment in order to have a full further financing, next further financing payment. But they forgot that actually in case that they spend more than 70% of the previous payment before request for further pre-financing payment. I mean, before that first year, for example, of implementation, they can send payment request with a report for more money, obviously for the second installment. So there is option always that if you spend more than 70% of the CA contribution, you can ask earlier before the deadline for the next further pre-financing payment. You can ask money earlier in that case. So this option is, I don't know, it is maybe used, but rarely. Often in the field and in practice, grant beneficiaries are worrying and struggling about this 70% of contracting authorities' contribution to fulfill in order to receive further pre-financing payment in full. This is only short, let's say, presentation of how balance payment is calculated if it is final report. So you have total project costs, which is worksheet interim final report, budget heading 13, column K. Let me just open this and maybe to see. Let me just show you. So this is column. Column K, this is column that it's actually summarizing where you're adding up, where you're summing all the previous costs. And this is row 13, which is total accept cost of the action. And that amount is basically CA contribution and co-financing contribution. the percentage of EU contribution and your contribution is specified in Special Conditions Article 3.2, and that the CA contribution cannot be exceeded as well as the value of the grant. So basically, this is the total EU contribution paid by CA initial pre-financing payment in case that's first pre-financing payment, and it is deducted for the total EU contribution. Then second payment, which is further pre-financing payment, again deducted. So the rest of the money and funds are the amount of ballast payment. This is the simple version of preparation of payment for payment request. And here, of course, this percentages needs to be in line with the Article 3.2. So EU contribution in line with that percentage and your contribution in line with that. Andrea, you wanted to say something?
Yeah, if you finish with the payment request, yeah, you finished.
Yeah,
Okay.
I finished.
Yeah. So
If there is no question, I finished.
Yes, there are no question at the moment. We still have 15 more minutes, and prior actually we enter into the final few slides that you prepare to summarize the final, let's say, messages concerning the finance reporting. I would actually ask Christina to send the evaluation questionnaire in the chat form and ask participants to use this time before we finish also to fill in the evaluation form, because it's very valuable information for us for further similar events and topics that we want to actually consider under our capacity development portfolio. So that was mainly it. So please continue since there are no more questions, and the link is already in the chat. So please fill in the evaluation form. And of course, if you have questions, ask.
So I'll continue now to wrap it up. We have only 15 minutes. So as I said, you can ask questions even in chat, and we will then take them in consideration and prepare answers.
Maybe Kalina finish the presentation, and then we can see the questions that will pop up in chat. So.
Mm-hmm. Yeah, I have to read these questions. So let me just wrap it up, and then I'll focus on these questions. Okay. This is only we will also tackle this while talking about financial reporting and most common mistakes. Maybe just briefly to once again point them out, just to have in mind while preparing your report. So supporting the structure of report and supporting documentation should be complete and should be structured at, we strongly recommend to be structured as we presented above in presentation yesterday at the beginning, I think, of our presentation. But again, today for the financial reporting, pay attention on signatures and authorized person who are signing and who should sign what, delivery notes, timesheets, any kind of notifications. Reports must be signed by the authorized person, and so on and so on. So pay attention to that. This is often a mistake. Pay attention to the budget from your Annex 3 of the grant contract, and that you need to report on the basis of that. This is your plan, and now in financial reporting, you're saying what at the end happened with the costs. If you modify anything from the reallocation, changing unit numbers, values, any kind of circumstances that upcome and you need to make some kind of changes which are not covered with a budget justification in your budget, and defer and kind of deviation from your initial budget, we strongly recommend to instead of do your unilateral modifications which are allowed by the contract, is maybe and prefer it's much better to consult and notify contracting authority in advance in order to avoid any eligibility of costs. Costs needs to be in line with the budget justification, and if they're not, as I said, please do justify, clarify, and ask for acceptance and ask contracting authority if it is acceptable. Also, apply for RISE principle in order to ensure consistency of your report, financial report, and supporting documentation. Financial report, detailed breakdown of expenditures, supporting documentation from invoices, timesheets, and so on and so on. So basically, fill in all columns, fill in all worksheets in your financial report. Avoid and check for the arithmetical errors in your report. Check how those figures are rounded, and then check for the VAT or other taxes except for the salaries which are eligible costs. Check for this and deduct them in advance because they are not eligible costs unless otherwise is applicable, of course. Do not just let me see, there is two questions. Relocations, minor budget modification present in the proper way to be visible and clear. Check for the application of the percentage of the indirect costs. Check correct application of the reporting exchange rate. Also have and prepare your bank statements of the initial or further pre-financing payments by the contracting authority, as well as the bank statements of the transfers to your co-beneficiaries who are implementing activities and have incurred costs within the action. Budget heading one, as I said, is most, has a huge number of supporting documentation, and this is something that should be cross-checked in order to ensure consistency of the information. You have various documents for the budget heading one. Pay attention who is signing timesheets, and you need to provide timesheets for each month for the members of the project team. And also timesheets needs to be filled in not with a, let's say, standardized text, but to, in a way, explain what has been done during that day, 2 days or 3 days, and needs to give more information of the task implemented, and sometimes pay attention not to non-working days to mark in the timesheets. Don't do retroactively the timesheets, just doing it on time each month, and each month signed and checked by the authorized person, project manager as well. Because otherwise there is a lot of mistakes and a lot of inconsistencies as well, and marked non-working days. Non-working days are allowed with a certain clarification, justification, and it may be justified and not be approved by the contracting authority, but with the specific circumstances of the action and specificity of the very action and activities within the action. So for the budget heading 2, often documentation is not structured and there is no overview, and it's not clear who traveled where and why and when. So basically, it is quite recommendable to use the overview that I suggested. Under budget heading 3, transfer ownership is always actually the documentation that if you're not doing the transfer, documentation is missing. So if you're not doing if you're not doing the transfer or ownership of the purchased equipment, please to ask for the approval of the contracting authority to retain the ownership. Visibility requirements for some reason are always challenging for the grant beneficiaries, so pay attention to that. Numbering, unit number, specifications of the delivery need to be provided and need to be in line with the technical specification, technical offer by the supplier. In budget heading 5, often, as you know, pay attention to quality of your final outputs because they are most important for the eligibility of the costs. And procurement procedure, don't forget that. They're the one of the really challenging processes that needs to be implemented by the grant beneficiaries. So basically, this is the wrap up of the main things that we discussed today and yesterday. Everything is connected, narrative and final report. So you need, with those 2 reports, to give a whole picture of your action and what has been done in the previous implementation period. Let us see maybe now the questions that they have, right?
Yes, we have, listen, Kalina, we have 5 more minutes to finish. So I will help you. We have a question from Monica on the FSTP. So
Okay.
I think it's important to actually discuss it now. And then the second question from Adanella. Let's discuss it if succeed, because people are already, leaving. If not, then we will respond it in the list of questions and answers that we are going to create. Monica's question on the FSTP says that they just started implementing FSTP, meaning awarding sub-grants, in September, and they actually transfer, according to the agreement, funds to FSTP beneficiaries in September. FST beneficiaries, they have to submit reports to the organization, to the contracting authority next year in February. However, the organization needs to submit an interim report for the past period to the end of the year, to the 31st of the September. So her question is
how to proceed, I suppose.
Exactly.
Well, let me tell you again, you need to find in this case, because you don't have anything, let's say, tangible. You have only the transfers, and you expect only their outputs and reports until the February, right? Then in this case, you should maybe provide a supporting documentation, those transfers, the selection procedure, first of all, how it's been done, and the documentation related to that, everything about it, and then the transfers and then on contracting authority is whether to, I suppose the contracting authority will actually approve those costs maybe in next reporting, because in a way this is advance payment and you don't know whether this is going to be eligible or not. So in principle, you provide your supporting documentation, but I think the contracting authority is going to wait for the next reporting period to overlook and to see the overall situation with a third party in order to decide whether they should accept you this cost. In the case they accept you this cost, it means that they accepted that at the end it happened that this is not delivered properly, that even you don't accept that output from the third party, whatever it is expected as an output or activity. So basically, for me, whole selection, this is now important because you have selection, whole selection, everything about selection, and then transfers, bank statements, contracts that you sign. Suppose you sign the contracts with them with regards to this, and to see what is envisaged in this third party, what is the dynamics of reporting, of payments, of activities they should implement or deliver, and so on and so on. So this is my
Yeah.
recommendation.
If may I add to what you said, what actually you can do to, like, meaning for the future situations, to overcome such a situation, since you actually provided, let's say, to them installment for the period of 6 months, that is duration of their projects. However, you can also, for example, require from them the, like, also small interim report on their side after the 3 months. So you will have actually information also on the cost that they incurred during these first 3 months. So it can be also solution if, for example, the issue in implementing now the FSTP is whether you can claim those costs in the interim reporting period or not. So you can also manage, while designing the actual plan on implementation, on how this will, let's say, play to contribute to your finance management.
And Monica, don't forget, because today we are talking about financial documentation, but this is also related for the narrative report. Please do, under the activity that is related to third parties and this financial support, to explain everything about it, even the things we are talking now, saying that this is expected, this, what they did, what you expect, and so on and so on. So you need to give, and how many of them you have, how selection process proceed, give all the supporting documentation with regards to that. So I think that this should be covered also in narrative report, then maybe reflected in financial report, and then you'll see how contracting authority will accept that. Maybe if it is your payment to the first to the third party, I don't know now. I'm talking without any document, exact that I can review and then tell you more precisely what and how it should look like and what may be the decision of the contracting authority. But if you gave them maybe a small pre-financing payment for that period, for example, which is not substantial, giving the whole financial support that is planned for them, maybe it's going to be acceptable. If it is 10% or something, but 90% is expected in next period, you'll see. I mean, I'm as I say, I don't know your project and exact how it looks like and what is envisaged. But please do explain the narrative and then give supporting documentation for the narrative and for the financial, meaning the bank statement, contracts, and everything else.
Okay, thank you, Kalina, and thank you, Monica. Thank you also for other participants that just sent a few more questions that will be responded in the Q&A list that will be created by Kalina as a follow-up to this event. I want to thank you all. It's 3 o'clock, so it's time, and it was a long day, and it's a Friday. I want to thank you all for the participation, for so many of you staying with us until the end on such a usually not attractive topic. Anyhow, I really believe and hope so that this information that Kalina shared with us yesterday and today will be useful for your future work, and that you will, of course, improve the management and reporting of your grant projects, and definitely that TAXO as such will also have opportunity to organize future similar events. Kalina, I give you the final words, and then we are ending the webinar.
Thank you very much, Andrea. Thank you to everyone and to all questions. I see now in questions that you are actually now posting, but unfortunately we have to wrap it up. We will give you the written answers. You should have done it earlier so that we can discuss. I really like discussions and to hear the practical examples and the challenges that you're facing in this process. I hope that we helped you. I hope that we covered everything that you expected, and wish you good luck with your projects and successful implementation of the grants and grant reporting, of course. So see you maybe in other occasion. Thank you very much once again. Thank you.
Ciao, bye. Bye.
Ciao, bye.